All right. Good afternoon. All right, ladies and gentlemen, let's try that again. Sit down, tune in, turn on. I just completely had lost my internet connection there momentarily. We might be good to go. Hopefully that does not transpire again throughout the course of this session. So stay with me here for just a second. I'm back. I'm connected. Please chat in right now. Let us know that you hear me all right. What about timing on that one, huh? So that was not an awkward pause on my on my behalf. That was losing an internet connection. You know, most of the time that does not happen. But for those of you that do not know this, I live on the island of St. Croix, and everything can be a little bit crazy here from time to time. So all right, let's make sure we're good. Yeah, all back. By the way, where's everybody joining us from today? Yeah, feel free to chat in. I'll give it a minute or two to make sure that I have stable internet connection. I'll also I'll flip the camera on. You guys, you can see me, you can hear me. Fantastic. If you see me looking around, I'm just making sure everything's working over here. Okay, got to make sure we're up and running. Fantastic. California, Chicago, it's starting to get cold. That sucks. I am done. I am done with Chicago weather. Just done with it at this point. All right, looks like we are okay to go. So okay to go. By the way, a couple of things that I say kind of informally here. Fantastic. By the way, I'm just kind of reading kind of in real time here. By the way, people always ask me this question, which is this live? It's live. It is live. So you can actually see live quotes obviously pumping through the screen at this point. Yeah, hopefully those quotes keep coming through. So if we were to cut out inadvertently, I'll just sit here until it comes back. But again, we rarely have internet issues out here. Anyway, let's let's get off and rolling here today. As I was saying, this is live. You can ask questions. I'm reading the chat in real time. By the way, if I have the camera on and you see me like looking over here, here, I'm on a very large multi-monitor system. So I kind of prefer that for especially for doing this. So you don't need 6 monitors to be able to trade. Quite frankly, if I showed you my screens here, I can show you all the screens, but I do not even use 6 monitors for that. I'm just making sure we're good. There we go. Just making sure we got the right screen on. But I just use 3 monitors for trade and 3 to be able to run this this broadcast here. Anyway, as I was saying, we're live. We're going to do some live trading here today. I'm at least going to present a couple of live trade ideas throughout the course of this afternoon's session. As I hop into this, let's just get started. You're watching a TheoTrade presentation. We're going to discuss inflection point trades, a high probability income generating system. My name is Don Kaufman, so welcome everybody. I'm just sorry, I'm laughing here at some of the comments in here. By the way, again, when the commentary is live and the questions are live, I'll even kind of correspond back and forth with you throughout the course of this. So those of you that are on here and you're live, chat in. That's what we're here for. All right, let me jump into it. We're going to drink plenty of caffeine throughout the course of the next 90 minutes or so. So copyright disclaimer: this is ours. This is not yours. Listen. The reason I throw this up here, again, we are located in none other than Christiansted, which is in the U.S. Virgin Islands. For those of you that have been around for a while, we were originally located in Scottsdale, Arizona. We, during COVID, we up and moved. We had some friends that lived out here in the Virgin Islands. We came here for 6 months. We liked it. We moved. That's pretty much the end of that story. I've done my time in Chicago. I've done my time in New York, even a little time in California. Living in Arizona on and off for about 20 years, but I've now been in the Virgin Islands for, it's almost 2 years to the day that we've been down here. Next, risk disclosure, okay? We're not financial advisors nor a broker dealer. I just put that out there because 15 years I did work in the brokerage side of the business. Okay, let's get right down to business. This is why you're here today. In fact, tell you what, we're getting all kinds of crazy. I'm standing up. So we're driving the desk. This is why you're here today. So we're going to talk about a strategy that's just going to thrive in the midst of volatility, and it's going to be regardless of market direction. We're going to learn to embrace fear. And interest rate chaos is actually only going to help us. So one thing you got to understand about interest rates, they might be going up. They may actually kind of flip back over, do what they call a pivot. They may halt them. Anything regarding uncertainty, anything regarding chaos, anything regarding, in fact, volatility or bear markets, this is where we live. And when I say this is where we live, this is what we actually, we look for in markets. And that perplexes a lot of people. So we're going to discuss exactly that today. Okay, if you're concerned about risk, you're going to learn to cover yourself in a single strategy that's going to encompass a risk mitigation technique, okay? But it's also going to encompass generating monthly income. Obviously, we're going to talk about real capital, real trades. Listen, number 4 on here is probably one of the more critical aspects to me, is that the fact of the matter is, you take a look at this. When I say real capital, real trades, talk is cheap. Okay, everything that we do here at TheoTrade, and I say this right up front, everything we do here at TheoTrade, this is no holds barred trading approach. You get to see everything. And when I say that, I mean when you say see everything, this is an account. I have a multitude of accounts on here. Okay, I show everything. I show people like what I'm making on a day-to-day basis. Obviously, we're just passing through a weekend here, so not too exciting. Yesterday, markets were kind of open, but I show everything in terms of balances here. Okay, I come in and I'll actually show you, for instance, the account statement. Delete that trade out. Okay, profit and losses. Like, I've been in this business for a long time. And, the fact of the matter is, as I say, talk is kind of cheap. Like, I don't really care what somebody says. You want to see P&L, okay? If people are not showing what their screen is, and by the way, because I'm showing you my P&L does not necessarily imply that you're going to make $211,000, okay? That is what I'm up year to date. And everybody always asks, well, how big of an account? So you can see the account right now. I have not put money into the account. I have not taken money out of the account. So the account's up a little bit more than 100% on a year-to-date basis, okay? But it's hovering around 210, 212 today. That is just one account. If you want to see another account, for instance, this is an IRA. Obviously, in an IRA, it can't be these totals. This account's up about $50,000. This is a smaller IRA. I say that because I have another IRA over at Tastyworks. This is an IRA that's up, okay, almost $50,000. The other IRA is actually sitting over here at Tastyworks. And I've got 2 different accounts sitting here. So again, we are strong believers, okay, here at TheoTrade. This is a no holds barred approach. You get to see everything. You'll see 18 months of results from inflection point trading. Listen, everything I talk about today is applicable to small accounts, retirement accounts. In fact, I'll even do some of the trades inside of my IRA. So $2,000 or more, you could potentially achieve these results. And number 6, you're going to find a monthly income strategy for your portfolio that you simply can't live without. Like, you're going to learn a little bit about inflection point trades, okay? And more appropriately, not only they work right now, but this is where you want to head, especially in the midst of some of the chaos that we're presently in. By the way, a free gift to you, stay with me right to the end of this webcast. We're going to give you what is a $500 value, the expected move indicator, or the auto expected move indicator. If you're unfamiliar with this indicator, again, I've got screenshots of everything, but I'm a big believer, like, hey, let's just bring it up here. This is the expected move indicator. The 3 lines actually represent, it's the option market's depiction of risk moving forward. And I'll show you the SPX, because the SPX, this is the mother of all products. If you take a quick glance at the SPX, you can kind of see this is what the option marketplace, okay, says, okay, about markets moving this week. It says we should move up to here or down to here. And you go, well, who cares what the option market says? You should care, because there are billions and billions at risk, okay? In fact, it is the most pivotal marketplace out there, meaning the SPX is the mother of all markets. So this week, for instance, there's $124 anticipation of movement. And you should know that, because in any given week, we stay inside the expected move. It's an indicator that'll work for every liquid product out there. Stay with me right to the end of the webcast. We'll actually give you a copy of the auto expected move indicator. It's $500 value. The reason we give this, I use this indicator just incessantly. And I think it's important to even understand some of the nightly videos that I will bring to you. All right, a couple of housekeeping items. Listen, this is skill set. Shut the door, turn off Skype, chat, whatever else is distracting you. We're going to run about 90 minutes or so today. Kick out the kids. Definitely kick out the kids. What do you think I'm hiding over here in my office for? So I have 3 of them, okay? And they're in there, okay? Another building here in the house. But listen, the point I'm trying to make is you took time to be here. Focus on being here. The stuff's important. I'm going to run at a very, very quick pace. If you've ever heard me discuss inflection point trades or inflection point trading before, every single time that I do this presentation, and I recognize some of the names already in the chat, but every single time I do this presentation, okay, I'm always adding something. Okay, I'm always showing another angle. So even those of you that are experienced, listen, you're going to get a lot out of this. So a little bit about background about me. All right, we got a pretty good number of people that are joining us today. I'm just kind of curious, how many people here are brand new, have no idea what a TheoTrade or a Don Kaufman happen to be? Just a Y for yes and N for no, meaning like, yes, I know who you are, no, I have no idea who you are, okay? And just chat in over here, I'm watching. The awkward pause for me. All right. Kind of yes. So I'm going to give you the nickel tour. So people, first of all, I always say, I watched order flow for 15 years, and that's why I'm here. People have just no clue what order flow happens to be. Here's the bottom line. I'm going to kind of back you into this one. I got to see everything that you did for the better part of 15 years. So in the beginning of my career, I actually traded in Chicago. And even before that, like, people always ask me, like, how did you get involved in trading? My family was involved in trading. I was not necessarily like a second generation trader. It was actually my uncle's family. They were market makers. I had cousins that were market makers. And on a whim, 3 weeks out of college, I went from eating ramen noodles in a dorm room to trading in Chicago. And shortly thereafter of trading in Chicago, about 18 months after that, I met a couple of individuals on the floor, specifically in the OEX pit, and those individuals turned out to be the founders of thinkorswim. So I went with them. They said, "Hey, you're a kid, you want to come in here?" So initially, I started managing some capital with them. We managed about $400 million with an option strategy, actually not too dissimilar from what I'm going to talk a little bit about today. So we managed money. A couple of years thereafter, when they're building the brokerage firm, they said, why don't you go out and do the education? You can just build the whole entire education division of thinkorswim. And I did. So I was on the executive team of thinkorswim when we took the company public in 2007. I went on in the merger of 2009. And then I went on to actually run education for all of TD Ameritrade, which I know everybody's kind of familiar with, but it's TD Ameritrade. And at the time I was there, we had about 7 million clients. And again, it all comes down to, I got to see everything that you did, and we learned immense amounts. Like the one crazy thing about, being there and getting to see everything, when you're working at the brokerage firm, you can't necessarily talk about some of the research that you're doing. So what do? Well, with all that knowledge, you eventually leave the brokerage firm, which is exactly what I did in 2015. So I had a 5-year lockup clause with TD Ameritrade. They bought us in 2009. We closed the deal basically at the end of the year. So for 5 years, I actually sat there and ran education for TD Ameritrade. And after the 5-year lockup clause, I was out of the contest. And we built TheoTrade. So it's a little background. The best part of that is several of the individuals that work in our division of TD Ameritrade, they came with me. And you'll recognize some of the names over here, from Blake Young to Jeff Bierman to Brandon Chapman. Again, TheoTrade is not just a one-trick pony. We've got 8 full-time instructors over here. Again, if you ever need to get a hold of me today, after today, support@theotrade.com. Put my name, okay, in the subject line, and the email goes directly to me. So I still do some TV appearances from time to time. This is actually the last time that I was on. This is the last time, I should say, I was in Chicago live. I still do TD Ameritrade TV on a weekly basis. I'll still do a couple of hits on, CNBC from time to time. It's myself pitted against, of course, Kevin O'Leary. All right, let's get down to business. Talk about trading. Volatility's arrived. Volatility's arrived. It's not going to abate soon. Inflation's still running red hot. This is going to be kind of fun because, the CPI report obviously comes out when? Thursday morning. This is going to be interesting. The Fed's pushing rates higher and contracting the balance sheet. By the way, Fed minutes are coming out tomorrow. The dollar is strong. And if you're not looking at all this stuff, like, hey, I can give you the little bit of a tour here. Like dollar, raggy. Okay, that's just wild. Bonds are like a full heaving crash at this point. I mean, the implications of this they're not good. Geopolitical risks are proliferating. That is the understatement of the day. The only thing I want you guys to know, okay, about this is it's game on. Like, just the one thing about the strategy that I'll talk about here, you can't think about stock picking. Reddit boards, they're not going to cut it. Like, when it comes to stock picking, people are still talking about, well, that Credit Suisse is not going to go out of business. Like, you shouldn't even concern yourself with that, right? Forget it. You need to figure out something to be able to make money and embrace some of the chaos, embrace the volatility, right? You can't rely on directional bias, because if you do, no one's going to be able to time this marketplace. Like, think about what you're heading into in the next 48 hours of a marketplace. And I'm deadly serious about this. Think about, okay, what you're heading into. Oh, the Fed minutes. Oh, the Fed minutes are unequivocally going to move the market this time, okay? Because the Fed minutes are actually going to provide insight to the future, okay? Possibility of rate increases or a pause. So that's going to move markets. The CPI number, there have been nine very serious trading days the entire year. Serious means a movement less than, or I should say more than 3%. Of those 9 recent, okay, major moves, all right, 2 of them have actually come from CPI prints, and those 2 moves this year were over 4%. So 4% in the S&P 500. So again, you got to embrace the volatility, embrace the chaos, okay? We're going to actually look at a strategy. Number 1, doesn't rely on directional bias. Obviously, loves the fact that we're going to be volatile. You got to reduce risk while substantiating monthly returns. Okay, so we're going to discuss a little bit about inflection point trades. Higher volatility has resulted in significantly more options premium. So we're also going to discuss options. Okay, for those of you that do not know anything about options, all right, again, bear with me on this thought. I know that some people are just like bent against, like, I'm never going to trade an option. Listen, focus. Okay, I am going to explain a little bit about some of the basics of options in a moment. But for those of you that are already in the know about options, this presentation is directly geared, okay, for both ends of the spectrum. So We're absolutely going to talk about some of the basics, but we're also going to work our way into the extreme. If you're a little new to this, okay, try to grasp, again, new to this, grasp big broad strokes of logic. If you're experienced, look at the little finite nuances. So we're going to talk about inflection point trading and how it's designed to sell options premium while reducing risk. It's one trade, okay, one trade, one hedge, and one end goal to be able to make money. Okay, obviously, like learning to sell options, people hear this all the time through the grapevine. They hear selling options is just the way to make money. But anybody in here, and I'm serious about this, if you guys have tried to sell options, what happens to you? You tell me. Okay, and again, I'm sitting here reading the comments. I don't mind, reading the comment off to the remainder of the group here today. What happens when you sell options? If you've done it, you're going to know there's risk involved, because what people do in options, they go, you make money, you make money, you make money, make money, make money. Boom! Did you see the train that hit me? So that's what happens to most people that sell options premium. They do not understand, okay, they understand the risk, but they don't understand how to mitigate, how to control the risk, okay? They're not looking at the right angles. And that's exactly what we're going to encompass today. So today's session, the whole design of today's session, separate myths from real risk, fact from fiction, all about selling options premium. But more importantly, about selling premium, okay? Got to be learned, and understand that we're going to talk about risk mitigation, controlling the risk. I know that's not a popular topic, but I think everybody could agree on one thing here. Our market's volatile. Like, it's hard to get a lot of people to agree on anything. Our market's volatile. All right, well, we could look at the VIX. You go, yes, they're volatile. In fact, take a look at the VIX over the last 10 years. If you look where we presently are, I'm going to put the mouse right on where we are. Okay, are we volatile? Because you can count pretty much on one hand the number of times that VIX has really been above this 33, 34 level, right? This morning, we actually got all the way up, right up to that 34 level. So again, I stress to each and every one of you, okay, pay very careful attention. The next thing you're inevitably going to say, you're like, I can't do it. I don't have the money in my account. Yes, you do, because you just have to figure out how to do it without a ton of money in your account. So somebody just came in and said, okay, I do cash secured puts. My account is not that big. Yeah, you don't have to do that anymore. They've changed all the rules regarding margin. Okay, there's only a handful of brokerage firms, though, that actually changed their internal rules, okay, with the distinct changes in FINRA rules and SEC, okay, and NFA rules. So I'm actually going to discuss that a little bit today. The other aspect of that is I'm going to just reiterate. If you have an account and your account is even $2,000, you can do anything that I'm talking about today. If you have $5,000, excuse me, if you have $5,000, you could do this inside of a retirement account. Okay, everything that I'm saying inside of a retirement account, people go, I can't do it. Okay, no, you just don't know how to. That's the difference over here. So for starters, for those of you that are new, look again to grasp big concepts regarding probability and risk. Let's get into this. If you know nothing about options, good. We're going to dive right in. So there's a lot of different facets of selling option premium. People hear about these, oh, I sell premium, or, oh, credit spreads. I got a bull call spread and a bear call spread. Okay. You'll hear you can sell naked. Ooh, that sounds exciting. Selling naked is very scary. You'll hear about like delta neutral trading, credit spreads. Again, it just goes on and on. Listen to me very carefully. Okay. It's all the same crap. Listen carefully. It's all the exact same thing. When people they talk about the different strategy, they're like, how's your iron condor doing? There's one funny thing that they told me in this business. I was probably, 14 years old the first time I actually heard this. And it was just something that was said all the time, because there's all these name strategies, bull call spread, bear call spread. Okay. There's mambo combos, there's conversions, there's boxes, there's jelly rolls, right? They'd be like, kid, there's a call and there's a put, and you can buy it and you can sell it. I go, oh, okay. Well, how difficult can this be? There's a call and there's a put, and you can buy it and sell it. Okay. From there, sky's the limit. Listen, we're going to talk about selling premium today, and I'm actually going to boil it down to the most finite and the easiest way to look at this. Selling premium, you can be bullish, you can be bearish, but generally today, I'm going to be market neutral. I'm not going to sit here and preach to you about what I think about market direction because that's chaos. In the next 48 hours, I'm going to be wrong. Why? Oh, I was so bullish, and then the Fed, they screwed me. Okay, I was so bearish, and then that CPI report came out and it screwed me. Okay, you can't win with that. So be aware of it. All right, so we're going to talk a little bit about selling premium. By the way, how our members are doing year to date. You know what? I just asked this the other day inside of TheoTrade. We have a live chat room, a couple thousand people a day in it. Brian, okay, doing awesome. Professor B, got my head straight. Profits over 100K so far. Okay, again, this is all recent stuff. Started my IRA in June, following Theo's small methods, up 28%. Good stuff. Okay, up 27%. I mean, you got to realize this year, just being up on the year, S&Ps are basically down 25% year-to-date basis. Like, I think that's phenomenal. I like this one too. Michael said, get amazed by something every day at TheoTrade. It's a place you want to be. So I just threw that together. Let's get down to business. Your trading is based on probability. So one thing that I'm pretty adamant that you have to understand, okay, people they just constantly come in and ask me, and again, I've just been around trading my entire life, and they always ask me, like, how often are you right? And I'm like, oh my God, that's the most ridiculous question I've ever heard, because there's all these like newsletters out there that tout, come with me, I'm right 90% of the time, right? Listen to me very carefully, okay? You can make a monkey right 90% of the time. Doesn't actually imply you're gonna make money. Probability is actually very misleading when it comes to making money. You and I can be right all day long, and you can still lose money. Why? When you're right 90% of the time, you got to ask yourself, what's going to happen to me the other 10% of the time? You go, don't worry, you're going to find out. So stop worrying about the probability of success in a given strategy. You got to worry about bottom line, is it going to make money? Okay. It's not about probability. It's about profitability. Okay, it's not about probability. Probability alone does not make you profitable. It's got to be about profitability, right? And you got to look at not like one trade. You're like, oh, that one trade he did so good. Who cares? One trade. Okay. Yeah. I started doing this when I was 22 years old. Okay. So here we are 24 years later. I never looked at my trades and go like, oh, that one trade. I couldn't even pick out like, what's the greatest trade you've ever had? Who cares? It's about making money over time. All right, so let's get ready to sell some premium. Selling options premium, okay, it's more than finding a high probability trade. Again, we can do that in a second. As I said, like you can literally in a second find a high probability trade. In fact, you want to see? Come right over here to thinkorswim, pick a product. Give me a stock. Give me a stock. You guys give me a stock and we'll give you a high probability trade. I just want to make a quick point because people think that probability is everything in a marketplace. Nobody has a stock. Nobody likes anything right now. Oh, I love it. Tesla. It's always the first one. There's always one in a crowd. There's always one in a crowd. So I'm not even going to ask if you're going to be bullish or bearish. You want to know why? I don't care. Did I say that out loud? Oh, I don't care. Okay. So let's go in here and let's actually look for a higher probability trade. I'm going to go way out into the future. I just want to make a really quick point. See, over here, these are what we call information layouts. What does that mean? You go to options, theoreticals, and Greeks, and you come over here and you go probability out of the money. Or if you're on Tastyworks, you just open up, an option chain on Tastyworks. Okay, the same thing. It's called an information layout. Okay, and they have it there too. Look, out of the money percentage. Every major brokerage platform has those probabilities because trading is probability. Look, I want a 90% probability of success. He shoots, he scores. It's amazing. All you do is go probability 90%. Okay. You could train anybody to do that. But because you go out and sell this option, does it mean you're going to make money? Yes. 90% of the time. You go, well, can you check the math on that? People, that's one of the most heavily researched thing in the entire marketplace. So you can be right 90% of the time. Does that mean you're going to make money? Okay. It's kind of scary, right? But don't ever tell me like, don't ever tell me the odds. But no, seriously, like, don't ever tell me like, oh, I'm right, like way, like 95% of the time. Who cares? It doesn't make a difference. That's probability. That ain't profitability. There are very, very wide margins between somebody that goes, oh, I've got the best strategy. It's the highest probability. That doesn't mean squat. You think about that for a second, because people get sold a really good bag of goods over the years on that very notion. Anybody can find high probability trades. Like one of the things that I did for 15 years of my career is built some of the mathematics inside of inside of thinkorswim. We built like different ways to look at the option market with probabilities. Now everybody does it, right? Inflection point spreads. Okay. It's a system to find, trade, and hedge in one transaction. And that's exactly what we're going to do. Let's get down to business. So now we're actually going to go into a real example here. And I say a real example, okay, I'm going to use a fictitious example, excuse me, and then I'm going to go into the live markets. Still coughing up a fur ball. All right, here we go. This is a stock trading right at 100. Am I going to own the stock? No. Do I want to own the stock? No. Why? Have you looked at stocks lately? Enough said. We're just going to go out and we're going to trade options. Okay. There's no reason to have to own this stock, especially in a time like this. By the way, that doesn't constitute, do I ever own stock? Absolutely. I've got some stock positions right now. Okay. I own some stock. I have no problem with that. Like some people are just vehemently, like, oh, I would never want to own stock. I never want to do this. Why not, man? That's fine. I'm short 400 shares of Apple right now. Does that count? You're like, that doesn't mean you own it. Okay. Okay. I do own a few stocks in here, but I'm short a lot too. Anyway, I just wanted to show I do own stocks in certain circumstances, stuff that I want to own, but that's not trading. That's investing. Okay. And today we're going to talk expressly about trading. So here's a stock trading at 100. I'm just going to trade the options. Now, some of you know nothing about options. So when we start talking about options, you got calls and you got puts. Initially here, let's just talk about calls. Why? It's easier. It's just easier. It's just bottom line. Even for those of you that are experienced, it's easier. I'm going to go out and I'm going to talk about buying a 120 call. And for that, it's going to cost me $1. Now, that call is going to be good for 3 months. 3 months. Time out. We're buying a 120 call. What's a 120 call? Some people go, I don't even know what an option is. Well, now you do. What's a 120 call? Just say it's a 120 call. What does a 120 call give you the right to do? Gives you the right, not the obligation, but the right to buy the stock at what price? This is a hard one. 120, you're a winner. So you buy a 120 call, it gives you the right to buy the stock at 120. Do you have to buy the stock at 120? No. Why would I want the right to buy the stock at 120 if I don't have to buy the stock at 120? Because clearly, if you have the right to buy the stock at 120 and the stock is currently trading at 100 and the stock goes skyrocketing up to 130. So now let's say the stock jumped from 100 to 130. You're gold, Jerry, you're gold. Because you have the right to buy the stock at 120. Everybody else in the world has to go out and do what? They have to pay 130 for it. So what is your 120 call worth minimum with the stock trading at 130? Well, if you have the right to buy the stock at 120, you could buy the stock at 120. The stock is currently trading at 130. So the option has to be worth at least $10. You go, but you paid $1 for it. Good. So you're up 9 minimum. Okay. And you go, well, what happens if no one will trade with you? Well, that's what the market making firms are there. And the market making firms are actually getting, huge money to take that order flow. So what do? They take the other side of the order flow. But let's assume that nobody in the world would give you that. What do? You buy the stock at 120, immediately sell the stock at 130, you make $10 that way. So there's no way anybody can take away the fact that is called intrinsic value. Okay, it's $10. Are we okay with that example? So what are you learning right now? Buyers have rights, sellers have obligations. In this particular context, by the way, in trading, okay, if your palms are facing you, you're a buyer. Okay, if my palms are facing you, you're a seller. So, people watch like video and stuff and older video footage of like a trading floor, and they're like, how could anybody survive in that chaos? It's actually not very chaotic. You'd be surprised. Yelling and screaming that happens on a trading floor is far more orderly than people could ever imagine. There are certain individuals that we're always looking at. Okay, there's usually only a handful of individuals you're actually trading with, and that's what people miss about it. Most market makers in the pit are actually trading with a floor broker, especially in some of the bigger pits. So there's really only like one person you have to worry about. Everybody else is just competition. It's like, again, everybody competes down there, and that's why it's loud, obnoxious, and Everything is server driven now, which is utopia. Okay, so instead of going out now and buying this 120 call, we're going to go out. Okay, in our first example, we're going to sell a 120 call. And I always use this exact same example because it's just easier. And for that 120 call, you're going to receive a $1, okay, credit. Now I'm going to take it down here. It's a $1, whoops, swing and a miss. It's a $1 credit for doing what? All right, selling a 120 call. And that 120 call is good for exactly 3 months. Okay, so now we go out. Okay, do we own stock? Do we own stock? It's a yes or no. It's a yes or no. You're in chat. Okay, I'm gonna have to light a fire under a couple of you. It's brutal out there, I tell you. Right? Anyway, do I own stock here? Anybody? I'm just going out and selling a call. Okay, no, I'm not going to own the stock. So right now, if I just go out and sell a call, this is actually what we term selling naked. And this is where everybody goes, I don't like it. I don't like it because for margin, I can't do it. Don't worry about that. Okay. First of all, if you're concerned about margin, don't be, because I'm actually going to teach you, and I will actually teach this today, how to actually circumnavigate margin. Is that fair? By the way, day trading margin rule, you don't have to worry about that either. Like I see all these these posts like in Reddit boards and stuff, or like Facebook groups. They just pop up like in my feed all the time. And people are like, how do you get around the day trading margin rule? I'm like, really? Okay. What are you new? But not everybody, again, spent 15 years. I spent 15 years dealing with FINRA. Okay. I have figured out many of the ways around their lovely little rules. Anyway, you go out there and sell a 120 call. And by the way, circumnavigating the rules, there's nothing wrong with it. You're just basically trading products that have different rules. So we're going to go out and sell a 120 call. And when you sell a 120 call, some people that don't understand this, they're like, how can you sell something that you never owned? Okay. All right. I'm selling myself into an obligation. Okay. Selling myself into an obligation. Obligated to do what? Okay. If I'm selling a 120 call, I'm selling somebody the right to take stock from me at 120. Do I own stock at 120? I do not. So I'm selling somebody the right to take stock from me 120 that I don't even own. And that's why they call it selling naked. So what do I collect? $1. So I want you to first of all understand that if the stock is trading at 100 and we're selling a 120 call, that's a mile away, right? The market would have to move up 20%. That was the worst percentage sign ever. The market would have to move up 20%. That was even worse. 20% just to be able to come and get me, right? So this thing would have to rally a mile to come and get me, which it could happen. And I'm telling you, it can happen right now. But you realize you're so far what we term out of the money, because this option that I just sold for a whopping $1 is for 3 months. Now think about that for a second. You're like, okay, wait a second. You're telling me that I have to sit here for 3 months to make $1? No, I didn't say that. But I want you to understand what a high probability trade is. High probability, okay? And I'm actually going to get to the point where I'm going to structure a trade that is a high probability trade. I'm not saying that this is a good trade, not by any stretch of the imagination, but I need you to understand, okay, conceptually what we're doing before we actually start to put, right, the strategy in order. So what can happen here in the stock? Let's talk about that. Do I own stock? No. Okay, so I just sold a call. What else have I done? Nothing. I'm just selling a call. You go, what about the risk? Don't worry about the risk right now. We'll teach you how to hedge it in a minute. Mitigation of risk. Mitigation of risk, all right, is called hedging. So the stock right now is at 100. Where can the stock go? Over the next 3 months, it can go down. Oh, you're like, I'm very familiar with that. So if it goes down, you keep $1. If the stock stays flat, you keep $1. Even if the stock goes up, it gets crazy. Let's go to 110, you keep $1. If the stock goes to 120, what do? You wet yourself, but you still keep your $1. The only place you really start losing money is when you get above like the 120 level. You get above 120, okay, you're going to start eating into your $1 credit. After 121, you're a loser. Do you understand where I'm going with this? Okay, and you go, maybe, okay, maybe. Give me the probability in this trade. You tell me. I ask this question all the time. By the way, there's no definitive answer. What do you think the probability in the trade is? Forget about profitability. Profitability we'll teach in a moment. What do you think the probability in there is? Let's say probability. What's the probability of you making something in this particular trade? Okay, and the answer is, okay, Dead silence. I like this. This is a lovely group. Okay, nobody wants to even touch that one. All right. Donato is actually not too far off. It's at about 95%. Okay. Donato is not too far off. It's between 90. Okay. It's between 90 and 95%. I don't even know. I'm just saying, here's the bottom line. It's super high probability because the stock would have to go up 20%. Okay. It's not like, can a stock go up 20%? Sure. Stock can get taken over, be up 20% tomorrow. Twitter just jumped by, 20%, but it happens. Okay. I like that. Connor's like, I have not the faintest idea. I don't even know where I am half the time. No, I actually appreciate that because, that's kind of where we're headed, is how to figure that out. So let's just blank the slate for a second. We're going to move forward and then move back. Because when I say move forward and move back, listen, when you sell options, every day that passes, the option is decaying just a little bit. Okay. As time passes, options decay. A lot of people are familiar with that. In fact, many people have seen this decay graph. Yes. How many people here have seen the decay graph? Yes, it is. This is a whole lot of garbage because that's not the decay graph that we're actually using. These are not the droids you're looking for. This, okay, doesn't work. What do you mean it doesn't work? Okay. That's what everybody in options teaches. Yes, but this is what we term, okay, a near money option. We're not trading near money options. We're not trading near money options. We're trading way out of the money. We're trading the nosebleed seats. This is not how our option's going to decay. Okay. So why would we do this? Okay. You'll notice that in my example, I sold options a few months out in duration. Typically, traders like to sell stuff short duration. Just bear with me for a moment on this thought. So you're here, you want to learn to make money, right? Okay. You're here, you want to learn to make money. Options. If I go to an option chain, doesn't matter what you think over here, just go to an option chain, right? Let's go right into spiders. So let's go into the spiders. Why spiders? It's like one of the most marquee products. See how there's 1 day, 3 days, 6 days, 8 days, 10 days, sit, hike. Like, look, those are what we call expirations. There's options that expire today. There's options expire what? On, basically every other day. There's an expiration on a Wednesday. There's an expiration on a Friday. There's an expiration on a Monday, right? So there's a different expirations. So some people go, I would rather sell a 17-day option. I go, why would you want to sell a 17-day option? Give me a reason. And they go, well, because then I only have to hold the position for 17 days. I go, that's ridiculous. Who cares how long you have to hold the position? What's the name of the game over here? Tell me what the name of the game over here is. Make money. Who cares? That's what this is called. Make money. Who cares? How about if we went way out into the future? If we went way out into the future, 100 days, you go, do you have to hold a position for 100 days? No, nobody said I had to hold a position for 100 days. But if I sold something with 100 days and I closed it, okay, 20 or 30 days later, what do you care? You go, well, why wouldn't you just trade a 27-day option then? Because a 27-day option doesn't afford you the profitability, okay, that 100-day option would. Want to see? Okay, because this is where the proof's in the pudding over here. This is where people, they just don't understand, okay, why they're tuning into the webcast. You're like, I could have figured that out. Really? Because we're going to actually show you some of the mathematics now behind, all right, what we term inflection point trading. What we do here at TheoTrade is criteria. So let's get down, okay, to some business over here. We're going to take this example and we're now going to apply it to a live market environment. Ladies and gentlemen, welcome to the spiders. Why are we talking about spiders? Spiders, they've already traded almost 5 million contracts today. Is that liquid? Is there anything more liquid than spiders? Okay, not even SPX in terms of number of contracts. I mean, the SPX is a beast, but the SPX, what is the SPX? This is the place traders go to die. It's almost 2 million contracts in the SPX. But point I'm trying to make inside of the spiders, it's almost unequivocally, it's the most liquid product on the street. It's huge. So we're going to go 101 days out. Why? Because it's a nice round number of 101 days out. And we're going to do a very high probability trade. So we're going to do a very high probability trade in this particular case. So let's do it. Let's go right here to these 435s. What are they trading for? $1.25. Ready? I'm going to write all of this up here so you guys can kind of follow along. You can play the TheoTrade at home game. So we're going to go out, all right, in this first example, and we're going to sell, okay, this is a Jan. We're going to sell a Jan 435 call. And for it, we're going to collect $1.25, okay? Credit. Everybody got it. Everybody got it. Everybody got it. So sold, $1.25 credit. Now what am I going to do? Well, I'm going to think very long and very hard. Now, I'm not actually going to talk about reducing the risk just yet. I need you to understand this example. Then we're going to move on. Ready? So I go out and sell the 435 call. Then what do I do? Absolutely nothing. Let's assume that I did nothing, okay, for 1 month. What's 1 month? From the 101 day, look what the options are trading 66 days, okay? The options that have 66 days left. So what's the difference between a 101 day option and a 66 day option? What is it? It's like 35 days. So it's just slightly over a calendar month. What I'm going to do is I'm going to open up the 66 day options to estimate, okay, how much decay I can make in basically 30, 35 days. Okay, forget about stock price movement. The market can go up, the market can go down. Okay, we'll worry about that in a few minutes. The first thing that you need to understand this example, and you really do need to understand this in the example, is that people look at options that are 101 days out. And I'm talking about even experienced traders. And I know, just looking at the some of the names, I know some of you guys have some pretty good amounts of experience because some of you, you've been around for a long time. I just, again, I was in the options business all the way since like, the 90s. And I recognize some of the names in this chat from all the way back, my thinkorswim days. With that being said, what people are missing right now is there's phenomenal decay in what we term back month options. This 101 day option is going to burn, baby, burn. Okay. I want you to see what it's worth 66 days from now, or I should say 35 days from now. Apologize. Okay. The 101 day option. What's it going to be worth exactly 35 days from now? Survey says, okay, let's go right to the 435s. We're going to open this up. We're going to look right at the 435s. I'm going to highlight it. Okay. The reason I'm highlighting it is because I'm going to go, all right, assuming we just fast forward 35 days, I'm going to turn around, okay, and I'm going to buy that January option back. It's still a 435 call, okay, and I'm going to pay approximately what? 55 cents debit. You tell me, what did I make on the trade? Huh? You tell me, what did I actually make in the trade? Let's just ballpark it over here really quick. After commissions, after everything in here, you're going to make between 50 and 60% in 30 days, right? You're going to make between 50 and 60% inside of 30 days, okay? Now, this is a 35-day trade. I'm actually estimating between, like, I know this is 35 days, so I actually took us a little lower. It's supposed to make between 50 and 60%. So why do you get all these crazy monkeys that are selling options with 17 days left? Because they have no idea what they're doing, right? They have no idea what they're doing. And yes, it's 435 in there, okay? They don't understand a very simple concept. There's a phenomenal amount of decay out here right now. Did you realize that you could sell an option that is 101 days out? So why would I ever want to sell an option, okay, that's that far out into the future? I'll tell you exactly why. Look where I am. Look how far out I am. I'm at the 435. 435. Where's the market? Okay. Oh, did I not point that out to you? Oh, no, of course not. Not until now. We're selling 435. Okay. The market's at 360. Okay. The market's 360. 435. Like, you know how far 435 is? Okay. And I say, look, can it get there? It could. 435 is somewhere up here. Right. We got really close. And then it totally crashed and burned. We weren't obviously down this far. Okay. That's absolutely in the nosebleed seats. Do you realize between now and 100 days, or even now in 30 days, okay, in 30 days, let's say in 30 days, could we rally up? Yeah. But getting out there would be phenomenal. You have all the time in the world to do something. You're like, here it comes. The market's coming to me, but neither here nor there. We're not going to let you have, okay, dramatic amounts of risk. The point that I want to make over here is you have a strategy that's an incredibly high probability strategy, You can make between 50 and 60% in 30 days. And then I actually ask you why you're not doing this. Okay. Most people like, I don't have the margin to do it. Okay. Sure you do. I'll actually show you exactly how to do that. You do have the margin to do this. In fact, you can do this very large with very minimal capital. So the second reason is, okay, they go, well, how do you control the risk? That's exactly what we're getting to. Anybody can figure out how to sell an option. Not too many people that are going to figure out you should be selling it further out in time right now. You go, does that work on a lot of different products? Sure. Let's go over to the Qs. QQQ, why am I using the Qs? It's another big index product, and we're going to go 101 days out in the QQQ. Okay, here we go. Boom. Okay, let's go to the 335s and the Qs. 335s and the Qs. What are they trading for? $1.17. I'm just going to sketch it up here. Okay. So when I say sketch it up, I just want you to understand this is not like a one-off. Okay, this is something that each and every one of you could be trading. So these are the 335 calls. They're trading for, in this case, let's just call it $1.16, right? Close that little monkey up. Come out here to the 66-day options. Look at those same 335s, 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 335s. What are they trading for? About 50 cents. So again, just about 35 days from now, I can buy them back for what? 50 cents. What has he won? Well, okay, you're making between, as I said, 50 to 60%. It should be 50 to 60% in about 30 days. Okay, and that's actually the logic that we're looking for. This is precisely the logic we're looking for. I'm not telling you you're going to make the full $1.16, but how about you could go out and do this in a bunch of different products simultaneously? Be able to collect 50 or 60% inside of 30 days. And what do you do after that? You just do it again, do it again, do it again, do it again. You go, what about if the market moves huge? That's what we're about to cover. Okay, that's exactly what we're going to cover. And for those of you that are a little newer to this, okay, if you're newer to this, I want you to understand something. Okay, I'm talking about calls. Do you realize you could do this with puts, and in puts, you can actually collect twice as much money? The same delta in the put over here is trading for $2. You can collect literally double the money inside of puts. You go, but what if we crash? Okay, what if we crash? That's exactly what we're going to get to. Is everybody okay? Because again, it's important that you guys understand the concept over here. We're selling options, but we're selling them really far out in time, because options that decay quite rapidly. And what I want to get to is options like this that have 30 days left, or options that have 17 days left, or options that have 2 days left. Yes, they decay very rapidly. They also take extraordinary amounts of risk. You know, if I did this with a 10-day option, let's see, with a 10-day option, okay, you just wanted to collect like some 50 cents or something like that, I'm selling the 290s. You think this market can't go from 265 to 290? Okay, you dead meat. They can easily get to 290 here, 290. Okay, I mean, holy crap, we were at 290 what? Like 2 weeks ago. I mean, it's insane. People, they do not understand. Okay, they do not understand the logic of going further out in time. Here's the logic of going further out in time. I don't care where you make money as long as you're actually making money and you have incredibly low amounts of risk. The risk has got to be mitigated, because right now, if you want to step out in the middle of a firestorm, you go for it. Okay, you'll get killed. You get killed. You have to understand what we are here to do at TheoTrade isn't just to preach like, oh, sell options, sell options. It's about criteria. Okay, it's not about the big strategy. Yeah, it's about the logic. It's about the nuts and bolts behind it. Okay, anybody can tell you to sell options premium. I mean, that's, you know, around the campfire, that's what people are always talking about in options. Like, oh yeah, man, you should sell options. Okay, until you try it and you make money, get killed. And everybody in here that's ever sold options has done just that. By the way, I say that, and you know, if you hear me talk about, you know, you've gone out and you've sold options and you got killed. If I say that with, you know, a little bit of confidence, the buck stops here. I watched your account for 15 years. There's nothing that you're going to do that's ever going to shock me anymore. Okay, I managed risk for thinkorswim during the financial crisis. Like, I was called into Chicago. They go, hey, now we're not even going to do education. You're now a risk manager. I go, sweet, man. I mean, that's where I started in this business. So listen, there's nothing I haven't seen. There's nothing you're going to tell me that's going to shock me in here. Okay, what we are here at TheoTrade to do, okay, is develop criteria to make, all right, maximize degrees of profitability with mitigating risk. Maximize degrees of profitability, mitigating risk. Okay, Are there ways you can make more money? Of course, but you're going to put your neck on the line, which is ridiculous at this point. Nobody wants to put their neck on the line. Okay. You can't go out with a 401k and just be like, oh yeah, man, I'm just going to go out and sell naked. We got to teach risk mitigation, because what happens to people in this business is this: they have the 90% probability and the 10% hammer. Like, these trades that we're doing have really high probability, but when you're wrong, the market just rips your face right off. Listen, I am very aware that many of you have traded strategies like iron condors. Anybody ever traded an iron condor? Okay, I'm just going to throw this out here for those of you that do understand what I'm referencing. Okay, but some people go out and they learned a strategy called an iron condor. By the way, for those of you that have absolutely no idea what I'm talking about, I'm just going to sketch it up here really quick because I want people to understand exactly this, right? Doesn't matter what product. Here's the mighty iron condor. This is a stock, okay? And let's say the stock is, trading 450, right? You go out and you sell calls. Then you turn around and you buy calls. And then you go out and you sell puts, and then you turn around and buy puts. Okay. By the way, I love when I was saying earlier today, you're like, there's an iron condor, a mambo combo, it's a conversion, it's a reversal, it's this, it's that. In the end, you got yourself a call, you got yourself a put, you can buy them or sell them. The funny thing is about an iron condor, okay, it's got everything. It's got a little bit of put, a little bit of call, a little bit of buy, a little bit of sell that says put. Anyway, the whole idea is you sell something here, you sell something here. You buy out here and you buy out here to hedge the fact that you sold here and there. Okay, what do you need in this strategy? To stay right in here. If we stay in here, okay, lo and behold, by the way, I know that some of you paid like $500 to learn like an iron condor. I'm not bashing the iron condor. I kind of am. I'm not trying to bash the iron condor. The iron condor right now has zero statistical edge. There's zero edge in an iron condor. The skew, okay, in option chains is heavily against the iron right now. So anyway, the whole idea of an iron condor is that you stay in the middle of a trade. This sells as a class. Why does it sell very well as a class? Because I'm going to tell you exactly what happens. You went out and you paid $500 on a class to learn iron condors. And the very first iron condor you did was in a product called SPY. And guess what? You made money. You go, I made money finally. Nobody actually thought to themselves, the iron condor that you did had a 90% probability associated with it. Remember what I said about probability earlier? Does probability make you profitable? No, okay, no. Probability will not make you profitable. So you go out and you did the spiders, okay, you did one lot and you made money. The very next time you do it in the spiders again. And this time in the spiders, you do a 5 lot in the spiders and you make money. Of course you made money. It's a 90% probability trade. The third time you do the trade, now you're not in the spiders anymore. Okay, because somebody convinced you like, hey, after you do it a couple times, you're profitable in the spiders, you should step up to the SPX. We call the SPX the mother of all products. We also call it the widow maker. We don't call it that early on. You learn that name later. Anyway, you go into the SPX. The SPX is exactly 10 times the size of the spiders. What happens to you in the SPX? You make money. It's a miracle. Okay. By this point, you're actually thinking to yourself like, this crap works. Like I got this down. So then you go into the SPX. Okay, you go, I want to do 10 contracts. By the way, in 4 months, you're a genius. Okay, you went from a 1 lot in the spiders, which is like hitting a T-ball, right? Okay, by month number 4, you're out there in the major leagues with somebody whizzing a ball by your head at 100 miles an hour. 10 contracts in the SPX is the same as 100 contracts in the spiders. Okay, so what do you do then? You know what's going to happen to you, right? You build up size and all of a sudden, train wreck. Okay. You ended up not only losing. Okay. And by the way, somebody was in here like, yeah, I paid a lot more than $500. And I guarantee this happened to you. Okay. I guarantee this happened to you. You come in here and you do a 10 lot. And as soon as you size up, you absolutely get wiped out. Not only do you wipe out what you made in the previous 3 trades, but you also wipe out at least half of your account. Okay. Welcome to the marketplace. And again, this is like crap where people like, they hear it and they go like, how could he possibly know? Right? 15 years, I was behind the screen, 15 years. We studied everything that you've ever done. When I say we studied stuff, okay, I didn't just be like, hey, let me go into John's account. How is John doing? Okay. That's not the way it worked. We actually went in there. We went in there, right, and did a mass study. Okay, we'd say, okay, 200,000 people have done an iron condor. Let's actually do a subset of 200,000 people that have traded spiders and SPX, okay, and look at the variability, okay, and profitability of a given trade. And we had an entire actuary group at TD Ameritrade and thinkorswim. We called them the nerdery. Dead serious about that. Okay, it was actually a fairly large group. It was all like PhDs. These people, they never even saw the light of day. We just basically kept them locked in a basement around computers and so forth. You say, what would happen if somebody did this trade? And they would actually look at your account and it would give us direct results. And I can tell you right now, you trade iron condors, you make money, train wreck. Your losses exceed the gains. Okay, and it was absolutely horrendous. You know how many times I've seen this and it's frustrating. But then people take this massive loss. Anybody had that happen to him? Just kind of curious. Anybody. It's like all quiet when people are like, maybe, okay. Oh, Connor got completely, sorry, Connor, I'm just using your first name to protect the guilty, all right? It happens to everybody that eventually trades these. If, people come in here and they, that hasn't happened to me. No, it has not happened to you yet. You just didn't trade necessarily enough in here. And then of course, after the $500 class, you take another $500 class where they teach you to fix it. Okay. I do not like the term fix. Fix is a very dirty word. Okay. I'm totally cynic regarding fixing. And then they go, it's not a fix. We teach people to morph trades. Okay. So what's morphing? It's an amalgamation of crap. Anytime you're fixing a trade, more risk, more transaction costs, period. There's nothing that you can do in this business that's a fix that doesn't add more risk. Okay, it's impossible. So yes, some fixes work. If the very notion of fixing trade throws what? More good capital after bad. So I have got to stress that to each and every one of you. Like, don't listen to this crap about fixing trades, because again, I reiterate, the buck stops here. If you've done it, okay, don't matter where, you've taken a class here or there, I have seen it all. This is how we actually built TheoTrade, how we built the criteria. We have 6,000 active clientele right now. We still see everything, right? There's nothing that's going to like evade us. You have to go out there and you got to learn, okay, to mitigate risk. Okay, I mean, listen, you got to learn how to do this right. Learn, okay, the correct logic overall, because like fixing stuff and doing trades like this, it's the same thing as like, when you talk about fixing a trade. I love this analogy, but you take a car and you drive it off a cliff and you bring it to a body shop and they're going to go, what is this? I go, that's a car that went off a cliff. I want it to look exactly like it was new. There's a reason the insurance company steps in. They go, that's a total. You go, no, I need this one. It's got to be fixed. And they go, no, it's totaled. You got, again, that's exactly the same thing I'll tell you of your trade. So we're going to walk you into, well, a hedge. You need a hedge, and a hedge, okay, in order to be able to sell premium. The one thing that I try to exemplify in here is that, we were talking a moment ago about just selling a naked option, but now you need a hedge. And you go, if you think about a hedge, the way I think, I like to describe a hedge anyway, hedging is providing like a sacrificial lamb. Do you have to buy a lamb to sacrifice the lamb? You do. By the way, I'm sorry to be so graphic about this, but it's the only way really to think of it. It's the only like good analogy I can come up with. Like a hedge is like a sacrificial lamb. So an island, a few hundred miles away from me, there's an island, okay, where there's a volcano. And I always think of like, the best analogy here is you have to sacrifice the lamb into the volcano to not anger the volcano. Well, guess what? Your lamb is an options hedge, and the volcano is the S&P 500 right now. So, we're teaching a little bit about selling naked, but now you need a hedge. Selling naked puts with no hedge, I say, no one questions the naked pig till he's served up for dinner. Like no one ever questions the picture over there. You're going to need a definitive downside hedge in order to sell out of the money naked puts, okay? However, we need to make the cost of a hedge reasonable. So what I'm saying is we're going to teach you to use this sacrificial lamb, but the sacrificial lamb has to be what? It has to be worthwhile in terms of price. It's got to be worthwhile. So I stress that to you. Even in the midst of heavy, heavy volatility, you have to make it worth your while. So let me show you exactly what we're trying to do. What we're trying to do in this particular case is this. We're going to go out, right? And we're going to sell some premium, okay? And we're going to, by the way, we're going to base this on real market conditions. So let's go back over to the market for a second. Forget about the QQQ. Let's cruise back over to the spiders. He's going back to the spiders. So it goes to the spiders. They're trading about 360, okay? And I just want to show you ballpark. Spiders are trading at 360. Look, I've got positions in here. Oh, the other thing I was saying, everything I do here at TheoTrade, I say no holds barred approach. Every trade I put on, okay, we don't do just education. We do execution, meaning that these trade ideas that I have, I will not discuss something if I'm not willing to put capital at risk. Okay, if I don't have capital at risk, then forget it. It's for nothing. If somebody's like talking about a trade, okay, and they don't actually hit confirm and send, then screw it. It's for nothing. And I cannot stress that enough. And I am wildly adamant. And sorry, sometimes I'm pretty kind of harsh on that particular front, because you got to be able to put capital at risk. This is not a business of educate and let somebody go. This is a business of, if I'm going to educate you on a particular strategy, if I'm not willing to execute it, it's not just a red flag. It's obviously, they don't even know if it really works. Okay. This particular strategy that I'm using in here has been executed tens of thousands of times. And when we managed $400 million using a very similar, okay, strategy into this. So here we are. I'm just showing you way out of the money puts that are 100 days out that are trading for over $2. So here, spiders are trading about 360, right? This is, I think, the best way for you to conceptualize this. So let's just put SPY trading at 360, okay? So bear with me on this thought. SPYs are trading at 360. I'm going to sell a 435 call, and that 435 call is going to be trading for $1. Simultaneously, okay, I'm going to sell a 260 put. 260 put is actually trading for over $2, but I'm just going to put it at $2. Okay. Now time out. So I sold a call and I sold a put. Why did I do both? Why did I do both? Last time I looked, the market can only go one way or the other. Market can rally up, or the market can sell off. The market cannot go both ways simultaneously. If you sell the upside, you better sell the downside. People that just go out there, you guys ever heard the strategy? I'm gonna sell some puts. Okay. It makes no sense from a margin perspective. Nobody ever seems to tell retail clients that, okay? They go, well, you can only sell puts because you're in an IRA. No, you can sell calls as well. In an IRA, you can sell calls now, okay? And you can sell calls naked in an IRA. They changed the rules. So that is not where I'm going with this, though. Again, in this particular case, I'm also going to sell, for instance, all right, some 450 calls. Let's say eventually collect another $1. Simultaneously, okay, I'm going to sell, for instance, the 250 puts. Just as the market moves. What you want to think about, and what I'm trying to create for you, is inventory management. What is the goal of Amazon? To move as much inventory as possible. Okay. And they're not making 50, 60% on their inventory. They're making fractions of a penny. You're going to make between 50 and 60% on your inventory, and you're going to move through it as fast as possible. Okay. Inventory management. What I want you to do is think about having a multitude of positions on both sides. You go, but that could be confusing. It can be confusing, okay? Think about this though. If positions, right, on both sides, it's actually less confusing there, because the market can go up or the market can go down. Again, it can't go both ways simultaneously. So if you're going to sell options premium, why not collect, okay, on both sides of the marketplace? Like, what do you care? Like, it makes you pretty much agnostic to direction. In fact, the crazy thing about selling both sides of the marketplace, when the market goes up, you're rooting for it to go down. When the market goes down, what are you doing? Rooting for it to go back up. You're like, oh, please, oh, please. Okay. When are you happy? You're happy when you're making 50% on the options and pulling it off day after day after day. And after you pull something off 50%, just do it again. Okay. This is what inventory management is about. But what's the problem with that? So that thing is trading at 360, right? And you sold some stuff out here and you sold some stuff here. What's the problem? Okay. What is the problem? Like, really? Anybody? What's the big problem? I'll tell you the problem. One day the market was at 360. The next day CPI came out. CPI, what does it stand for? The end of the world. You wake up and the market's down here, right? Boom, 5%, 7% move overnight. What are you going to do? You go, I wet myself. You're dead. The market can move literally that fast. Market can move as much as 7% overnight. Okay, how do I know that? Because that's what's called limit down. So the market moves down 7%. Then what do? You go, I'm dead. I'm totally dead. If you want to survive, you have to actually reduce risk. You have to hedge. You have to actually have the sacrificial lamb. If you don't sacrifice the lamb, you will, okay, learn. So what we do is we use inflection point trade. When an inflection point trade happens to be, we use what we term, okay, an inside, okay, hedge. What's the inside hedge? Imagine you sold a bunch of out of the money stuff out here. You've got a nice margin of error right here, okay? What this is, okay, this is a trade, and this is a trade designed exclusively to mitigate risk, because if the market comes flying down, it has to pass through the hedge before you can ever lose money. And this hedge is designed to actually catch the falling knife. The hedge is already on. You go, when do you hedge? You always hedge. You can't operate without a hedge. It's like this, you know, if you're in business and you're like, again, Amazon, like wholesaler, like we were talking about a moment ago, if you're like an Amazon wholesaler and you're going out and you're actually, you know, boom, 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 trying to go through inventory, you have to have some insurance on you. That's all that this is, okay? This is the cost of doing business. Without this hedge, you will not survive. And anybody that thinks they will, like, I can time the marketplace, can't time the marketplace. One day you will wake up, okay? And the market will be down here. If it doesn't pass through the hedge, okay, you're dead. You're dead. You will always have risk mitigation tactic in place. If you don't, okay, you die trying. And no matter how many times I've said this, I mean, I've been teaching the exact same thing, you know, in some form or another, but the inflection point right now is unequivocally, it's the only way to survive the onslaught of volatility here, okay? This is what you need to do, okay, to not only mitigate risk, but to generate premium. Now, before I go any further on here, okay, are we okay so far? Are we okay so far? Because what I'm going to do is I'm actually going to build a trade. I'm going to go to the spiders. Bear with me for 1 second on this front. I'm actually going to delete a trade out. I'm going to go into the spiders, okay, and I'm just going to build in about 2 seconds a simulated trade. So I want you to understand, you know, the context, okay, of the position. So, and I'm just going to build this in the most simplistic forms. Okay, when I say the most simplistic forms, I'm just going to build a position that everybody can understand, right, and little nuances, all for a matter of a couple of seconds over here. And I'm not going to get to every single nut and bolt like in this one. Let's see if I can actually build this. 36. Whoops, swing and a miss. Let's come in here to the, yeah, this will work. Let's go to the 35. Okay, got that portion done there. Come all the way out here. There we go. Come over here, analyze the trade. I just want to show you a risk graph on this particular front. And again, obviously I'm doing this a little bit off the cuff, but I want you to see, like in real terms, like what this thing is, like, and what it's capable of. So for those of you that have never seen a risk graph before, here is where the market presently is, okay? If we're going to crash and burn, we have to actually pass through your hedge. You can't lose money until the S&Ps hit 300. They're at 360 right now. They hit 300. They can't make that big of a move overnight. They cannot make that big of a move overnight. You can only move as much as 7% overnight. And if you moved 7% overnight, you would actually end up, okay, by the way, this is a 10% move right there, but 7% move would be somewhere over here. If we kept going down, it would actually help you, not hurt you. What I want you to see is, again, you have risk mitigation in play here, right? There's still great degrees of profitability if we stay flat, but if we go down, you can actually make even more capital, okay? This thing is designed, okay, for volatility. I mean, that's what the inflection point is. Now, everybody looks at this, they go, yeah, but I can't do that because I don't have the what, okay? I don't have the margin capability. Sure you do. Here happens to be none other than, I'm just going to close this up, okay? Close up my spider position. Once you see this position, this is an MES. MES is actually a micro. It's an option on a futures contract, only ties up $642 of margin. $642 of margin. By the way, that's an IRA account, Okay. I can even sell naked calls in my IRA. You go, that's impossible. Nobody can sell naked calls in the IRA. Yes, they can. They changed the rules almost 3 years ago now. I can come right into the micros. Okay. I can come into the micros. I can tee this up and I can actually sell. All right. Let's actually come over here, go over to Delta. I can actually tee this up. I can even sell. Look, review and send. It'll even show you, all of it. Okay. What you can make, what you can lose. Wrong account. Okay. What you can make, what you can lose, the reduction in buying power over here, it's negligible. It's not an illegal trade anymore. By the way, this will only tie up another $546 of margin if I sell a naked call in an IRA. You can do this with as little as $2,000, okay, in a regular margin account. In an IRA, you have to have up to $5,000 in the IRA to be able to do this. So what are we actually covering over here? Again, can't stress this enough, right? You're going out and you're selling out of the money premium, okay? You're reducing risk with these inside hedges. On top of it, you can do it in an IRA, all right? You can collect premium on both sides of the market. You can even reduce risk on both sides of the market, but you do have to have that sacrificial lamb to be able to to reduce risk, okay? And again, somebody said, can't sell naked at Morgan Stanley. I'm gonna be honest with you, move. Because your brokerage firm, okay, keeps training wheels on you, it's not a good thing. It's not a good thing at all. They changed all the regulations in the marketplace. As I said, most of the brokerage firms have not actually adhered to those. So there are brokerage firms that allow you now, okay, to sell anything you want inside of an IRA with the right product, okay, with the right product. And it's critical. Listen, this is why you want to use Inflection Point. You can sell this as little as $5,000, produces heavy positive theta, enhances existing positions, provides an incredibly high probability of success. You never need to buy or sell the stock. You can be wrong in market direction, still produce profitable trades. And I say you need this in your life. Okay. I'm actually going to show you in a minute 18 months of profitable trading with Inflection Point trades. And it can potentially bring in consistent returns while minimizing your risk. And then we're going to discuss some criteria. Okay, what's criteria? It's the nuts and bolts. It's how to actually execute upon these trades. When I say here are live trading examples, listen to me. Variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts. As I said, this is a retirement account. That's an IRA, right? There's no if, and, or but about it. That happens to be an IRA, okay? And in my IRA, it is what it is. You can trade it, and there's again, you go, I can't do this and can't do that. You should seriously consider, especially in the midst of volatility, okay, do what you can to survive. And holding stock and just praying at this point is not going to work. So what I'm going to show you, all right, are live Inflection Point trade alerts. We call them trade alerts because the following trades, 18 months of trades that I'm going to show you, the following trades, each of these is actually available inside of a portfolio. I'm actually going to bring this up on another screen here. Okay. Each of these is available inside of a portfolio, okay, right here at TheoTrade. So bear with me. I'm logging out and logging back in. And I'm going to make sure that each and every one of you can actually see this, right? All right, here we go. Because I want to show you exactly what the portfolio looks like. So we do not just talk about trades, we execute. And by execute, I mean, we have here. This is TheoTrade. So this is actually the site. Okay. If you look, different portfolios we have. This is the Ultima TheoTheta portfolio. Okay. And what we actually do, this is opening trades. Okay. And down below is all the closing trades. So when we do a trade, you can even just copy the trade like this, copy it, and paste it directly into a trading application. So you can see which trades are open, which trades are closed, every execution. On top of it, we do text and push notification, meaning that you get to see these trades pushed out to you, okay, as we actually execute them. And we do that expressly because, well, you need to be able to follow the portfolio. Anyway, all of the trades are, well, I'm going to show you. By the way, these trades, if you're kind of looking at this and following along for a second, this is nothing more than a screenshot, okay, specifically from right here. Like if you go over to thinkorswim and you go to account statement, I just want to show you exactly where this comes from. You open up spiders, okay, watch. there's 360 days in the spiders, right? So if I go 360 days in the spiders, that'll show you 103 fills. Here's every order that I've done for the last 360 days. You can only pull 365 at a time. So I figured I'd pull this. But the reason I'm showing you this, okay, is instead of to look at each and every individual trade, I just copy and pasted them right here into a slide deck. So here's Tesla, 58% return, bond short put, 57% return. I'm just going to scroll through this pretty quickly so you guys get the point. Everything we're doing in here is to achieve between approximately a 50 to 60% return. Again, between 50 and 60% is what I'm shooting for in almost every single trade. That's what we're looking for in terms of profitability in the options that we're selling. And I'll just start to scroll through. Now, as you gain experience, and you can see it's just option after option after option. Okay, it's the same thing. When you gain experience, and we're only here into, you know what, here we are going into March of 2021. There's a 19% loss, okay? As you start to look at this and we're starting to scroll through and you get more confident, we actually build into larger products. So instead of trading like spiders, we might trade like S&P options on futures. Why? Because they're a bigger contract, okay? So Amazon. So all we're doing is scrolling through, and I'm literally scrolling through every single trade. So now we're trading the ES. The ES is exactly 5 times the size of the spiders. So doing one contract in the ES is the same thing as trading 5 contracts in the spiders. It's a great way to actually get a little experience with a much bigger product. So now I'm actually scrolling through here. Okay, after you understand the complexity of trading a larger product, then we're going to get a little crazier and we're going to do trades like, you know, what we term Christmas tree spreads. Okay, if you're not familiar with the Christmas tree spread, well, get familiar with it. We actually teach a little bit about Christmas trees as well. These are actually done for much larger credits. For instance, $21 credit closed for $3 debit. It's huge profitability in these, okay? And we just ramp it up. And again, we're still in last year. Here's another Christmas tree spread from last year, 92% return, okay? I'm just flying through. It's 18 months of profitability in here. This one I did a little differently. I'm just showing you each one unit of this trade, 1 unit of the trade, I made almost $4,000 in terms of profit in 1 unit of the trade. That's it. It's just a bunch of one lots, you know, packed in here, $4,000 of P&L, okay? More returns, all shooting for right around that 50 to 60% return, okay? Again, here's another, excuse me, 1 unit, about $1,000 of profit, right? And we're just moving on a little bit. Now we're all the way into obviously 2022, okay? So what I'm just showing you is 18 months. Again, 18 months. You go, what happens after 18 months? I'll tell you exactly what happens after 18 months. After 18 months, I got really sick of putting them in there, okay? The rest of the history is right here on the TheoTrade site. You can see every single trade. By the way, you can see this since the beginning of time. Every trade that I've done actually in here opened and closed, right? So, and I'll give you just a quick example. If this trade was closed, like these are 113 puts, okay, somewhere up here, I opened the 113 puts. There they are. I opened those for 18 ticks, closed them for 9 ticks, okay? If this trade is closed, right, I sold something here. Looks like a call. I sold it for $10, okay? Where did I buy it back for? Okay, where did I buy it back for? There it is, 460. Like every single trade you can match up. There's no like nothing's ambiguous in here. The portfolio pretty much stands alone. You get to follow everything we do verbatim. And these are all, you know, trades that come out to you. And again, if you don't have a lot of time, it's not a huge issue. Like the one thing I stress here at TheoTrade, we are not here to teach a class and to just give you a pat and say, get out of here and, you know, go for it, okay? We provide trades. We provide trade alerts. Yes, you do have to learn conceptually what you're involved in. Like I do not want anybody just to rush out there, be like, I'm ready to trade, okay? You got to sit down, you got to focus on the logic, you got to understand what we're doing, okay? Inflection point, you know, trading, it's hands off. You can even use set and forget order types like good till canceled. So even a fraction of the time is enough to see big results, okay? Like, listen, this is what you're going to need for a challenging market. You got to learn a new market skill set that's going to last a lifetime. You can't just survive volatility. You got to thrive in the chaos. Like this is it. This is the time. You got to get on the right side of the market. You got to learn a skill set. Okay. People are only asking me right now, well, when's going to be a good time to buy stocks? Like seriously, you're in the midst of the throes of the first really volatile year that we've had since the financial crisis. Okay. What we're in right now is every bit as serious as the financial crisis. They're already bailing out the UK. Like UK is bailing itself out already. And people are asking me, you think it's a good time to buy stocks? Okay. You better like seriously change your mindset at this point. Got to use inflection point spreads to offset some of the chaos, to offset some of the inflationary risks, to offset the unknown. Just forget about direction right now. Okay. You're going to need this for a challenging marketplace. What our members are saying, again, some more recent stuff. Absolutely love this freaking website. There's so much here, so many different flavors. I can't pull away for more than 15 minutes. Can't get any work done. I love that. I could go on, but here comes that short I'm waiting on. Anyway, up 80K since January 1st of 2022. Right. And I just wanted to throw a couple of emails from clients that are fairly recent in here. All right. The characteristics of inflection point trading. Attributes of inflection point spreads are undeniable. You never have to buy or sell the stock. We don't buy or sell stock with this strategy. Okay. Risk is limited to precisely your comfort level. Comfort level is actually based on how much hedge you want. Okay. We will never use a stop order. You don't need stop orders. You don't want stop orders. In a market like this, you will get systematically ripped apart, systematically just demolished if you use this stop order. And I'm not saying that, just because I want you to trade this strategy. You don't use stop orders for anything right now. You won't survive. You can vary time frames in this and actually minimize your risk. The probability of profit is incredibly high. Most of the time, you're going to go out and you're going to sell premium. You're just going to close it for a 50 to 60% gain. That's it. That's what happens most of the time. Okay. Then why do you even bother with the hedge? You have to use the hedge because you can't operate in this business right now without a hedge. Why? What happens when the marketplace rallies 5% or drops 7% overnight? Okay. This is the perfect strategy to enhance one's stock portfolio. If you still own stock right now, you can actually learn to sell option premium. In this strategy, you can learn to sell heavy option premium against existing positions. It's also an excellent tool for those seeking, to build returns on an account. Obviously, that's what it's designed for. But in addition to that, new products allow for the sale of options in nearly any account size. Okay, that's the one aspect. By the way, Juan was already asking me, will you alert include the hedge? Of course. Okay, of course. Okay, Juan's actually pretty sharp because you noticed I didn't put a lot of the hedges into what I was just showing you. Because again, people ask what's the secret behind the trade? Secret behind the trade is actually knowing how much hedge for how much premium you're selling. I already showed you you're 100 days out. Okay, that works part of the time. I already showed you you're way out of the money. You got to learn how much hedge, for how much premium. But again, doesn't matter what account size you have, you can sell premium now. Building a portfolio of options. Listen to me, don't let the options portion of this intimidate you. You're going to need options for the foreseeable future, but going out and using inflection point trading can initially be done for minimal credits, minimal risk. But you got to understand that selling premium is like this gigantic power saw. Used correctly, if you use options correctly, it's going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. But if you use options incorrectly, like without a hedge, you're going to lop off a couple of fingers. Like anybody can come out and can sell inflection point, spreads and minimize risk. And, the one aspect that, the reason I keep talking about this just again and again and again and again, if you've been to any recent presentations that we've done here at TheoTrade, they revolve around these inflection point spreads. And people say, I literally had somebody say something to me the other day. They go, how come you're not doing anything new? I go, how about we're doing what works right now? I don't care about anything new. This has been the hottest thing going, since the onset of COVID. Onset of COVID, volatility hit the marketplace. It's been good ever since. Why do I want to change what's working? If it's not working, sure, I'd love to change it. It's not only, it's working, it's getting even better right now. This is something that's got progressively far better than it was even a year ago. And I just showed you 18 months of returns, plus and those ended in May, plus June, July, August, September. We're into October. We've taken literally, 2 losses in almost 23 months of trading on here. All of it's documented too. It's like 2 losses on there. Okay. I've had to use the hedge a couple of times though. I mean, look at the marketplace recently. Market's crashing and burning. So the hedge made me money. The option trade lost a little bit. It was gold, Jerry. It was gold. It still worked. Again, we can show you how and when to trade inflection point spreads in a matter of a couple of hours. But again, I just want to stress to you, you need to do something for the foreseeable future. I don't know at this point, and I really don't. I've been involved in this business a long time, but I can't tell you if we're going to have another lost decade. Okay, I can't tell you that, but I can tell you this without unequivocation. This is the most challenging circumstance, okay, that anyone has been in, okay, since the financial crisis, bar none, right? I mean, I went through like the internet bubble. The internet bubble was kind of like, whatever, we'll get through it. That was just overpriced garbage. Okay, this is serious at this point. It's as serious, okay, and every bit as serious as when we were actually digging into the financial crisis. You know, everybody said nobody even knew the financial crisis was happening. Please, I was in the brokerage business. Everybody could see it coming from a mile away. You just didn't know how bad it was going to get. We're in the same situation right now. Okay, I can see this is bad right now. It's really bad. I have no clue how bad it's going to get. I don't know if this is going to take 3 years to get out of. I don't know if this is going to take a decade to get out of. But I know one thing. Okay, the issues, we might rally back up. The issues are not going away. And when they're already talking about, like, you should be concerned, when they're already talking about rescuing, okay, all right, the sovereignty, a gilt, which is the 30-year bonds over in, the UK, when they're already talking about that, we've done 3 rate hikes and we're already rescuing, okay, the entire United Kingdom, you better start worrying, okay? Listen, TheoTrade creates detailed recipes on how to build inflection point spreads. And what that means, okay, is we literally go step 1, this is the product you do this in. Step 2, okay, how far out you go in time. Step 3, what should the volatility be? Step 4, okay, we will take you through detailed steps, not only to be able to get into the trade, but then of course to properly not only execute the trade, but manage the position. And the way you want to think of this, you wouldn't bake a cake without a recipe. Why do you trade without one? Okay, this is what you're going to need to successfully trade inflection point spreads for a living. You're going to have to know the underlyings that makes the best inflection point candidates. You saw what I traded. I don't mind saying that. You saw everything that I traded. So what did I trade? Well, I traded a little ES. Okay, traded some spiders, traded some QQQ. That's easy enough. You even saw something in Tesla, right? Okay, what volatility should I seek out? Okay, got to know the volatility. If you don't know the volatility, you're already dead. Too much volatility, you're dead. Too little volatility, you're dead. Like if you said right now, hey, can I do that on Tesla? Oh, no. No. Tesla volatility too high at this point. What about if, could I do it on Walmart? No. Walmart volatility too low. Okay, where should I be? Maybe you should use the spiders. You could trade one product for the rest of your life and probably be quite happy if you're selling options premium. Then what options expiration do I select? I love going through this because, like, if you look at options expirations, okay, look at all of them. Look at all the options expirations, okay? Not only do you have to figure out where to sell the option, which is further out in time, you got to figure out, though, where to hedge. Look how many expirations are. That's the spiders. One of the craziest thing, if you haven't looked at the SPX recently, the SPX actually has daily expirations. Look, okay, today is Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday. There's 2 expirations on Friday. Like, this is nuts. Like, look how many expirations there are. We're going to help you dial in exactly what expiration you should be using. Okay. Next, what should be the delta of the option I sell? What should be the option position that I buy against it? Meaning, like, what should I do for a hedge? How do I build the position? How do I build the position involves how much hedge do I need for how much option do I sell? Okay, it's called the ratio. Okay, somebody was asking the biggest difference between Ultima and inflection point. It's how we ratio. Okay, inflection point makes selling premium 1,000 times easier. Inflection point makes selling premium 1,000 times easier than Ultima. Okay, similar logic, different means to hedge. All right. Do I need a large amount of capital in my account to do this? Absolutely not. $2,000, you can do this. It's $5,000 in an IRA. What's the right amount of risk for me? So we can actually help you dial in, okay? More risk can make more money, but more risk is, well, just that, it's more risk. But depending upon the account size, we'll actually give you really finite guidance of how much risk we think that you should be taking, okay? At any given point in time, it's critical, okay, to kind of know like not only the right amount of risk, but you got to then dial in like how much risk you have on any given day. Like what happens if the marketplace completely crashes? Like we're going to help you with that. What are the percentage returns supposed to be? Between 50 and 60%. How do I protect myself from crashes? Okay, that's exactly what we're going to teach is that hedge. And that hedge, it is by far and away the most essential portion of this. Let me show you exactly here what we do at TheoTrade. TheoTrade creates recipes in trading. We talk about recipes in trading. It sounds easy enough, but it's like a pre-flight checklist. Okay, you go into a cockpit of a 737. The first thing the pilot does in that cockpit, okay, is actually walks through a highly detailed recipe. That's exactly what we're doing here at TheoTrade. Okay, but again, not only do we walk you into the trade, and it's one of the most important things to understand, once you actually get into a position, we cover the variables. Like, what if the market goes up? What if the market goes down? What if the market stays flat? What if a dividend is coming? What if expiration is coming? Okay, think about all the variables you could actually run into in a marketplace. We cover them all. Okay, trading is all about answering what ifs. What might be a good stock candidate, right? What's the correct options expiration cycle? How much capital do I commit to generating premium? What strike options do I sell? What strike options do I buy? How can I limit my risk? We have the answers. We literally have built like recipes, definitive criteria. They're checklists. I mean, they're checklists exactly like a pre-flight, okay? With each strategy, each unique variable that you're going to encounter, right? Again, TheoTrade, it's the answer to the questions that you have. We'll give you the right probability, option contracts for the account size. People ask that all the time. Like, how big can I actually do this trade? Okay. And again, we break that down. If you have a $2,000 account, a $5,000 account, a $10,000 account, $1 million account, we'll actually get into how many option contracts you trade. When do you close your premium sale? What if the stock sells off big? Do you bail out of the trade? What if we rally massively? Can I fix a losing position? It's about how, when, why, at what price. I mean, again, it's just the beginning of the variables you're going to face while, trading inflection point spreads for a living. You can read what inflection point spreads are, maybe even how to build a couple of trades. Somebody was chatting in earlier. They were chatting in earlier like, hey, I've done some iron condors. I've had degrees of success over here. Okay, listen, you can go out there. You can trade iron condors. You can even Google a little bit about selling premium. You will have 10,000 pages come up on Google about selling options premium. What they do not offer, okay, and what we are here and what we do at TheoTrade is to build a recipe for success. It's 20 plus years of trading experience. That's just me. We have 7 other full-time traders here. Access to client order flow for 15 years, meaning we studied everything you're going to do. We know what works and what doesn't. Okay. And I ran education for 15 years at both thinkorswim and TD Ameritrade. We had the largest option order flow in the industry. That is where we actually came up and built our criteria, and criteria is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. When you approach the section, okay, on criteria, you simply follow steps to be able to build a trade. Now we built, okay, a full-blown 4-hour class, the inflection point trading system, okay, before anybody freaks out. And I always, everybody always freaks out over here. They go, it's another $500 class, but it's not another $500 class, because I'm going to explain exactly what we do, okay? Before I even detail about the class, let me explain exactly what we do here at TheoTrade. TheoTrade is not going to be another class. And I, excuse me, I'm incredibly adamant about that. I am more than aware that a lot of people have gone out and they spend $500 on a class, and then they have to spend $500 on an indicator for that class. Before you know it, that's obsolete, and they have to spend another $500. And it's ridiculous. It's like a never-ending circle of spending $500. It's not what we do here. Listen, when I joined thinkorswim way back in like 2000, 2001, I've seen every other education firm out there. You name an educator, I know them, okay? Know them and know them well. We built TheoTrade to specifically differentiate from anything else that you guys have ever been to, okay? I mean, for a while, thinkorswim and TD Ameritrade owned Invest Tools. Okay, we had classes that cost $25,000 for 18 months. I guarantee somebody on here probably paid 25,000 bucks for 18 months of education. What we do here at TheoTrade, okay, makes that look like child's play. All right, it just pales in comparison. We do it, okay, for a few $100, and we actually give you trade ideas, which I'm going to come to. So the one and the most important thing is this, okay, what we do here at TheoTrade is completely all-encompassing, okay? We actually provide you classes. We will get you ramped up. You can email us after this, okay? For the next 3 months, okay? You get everything and get to see everything. When I say get everything and see everything, we've been around now, okay, since 2016. I only left TD Ameritrade in 2015. Shortly after, we launched TheoTrade. Okay, for the next 3 months, you get to see every class that we've done here at TheoTrade. For how long? There's over 100 of them since inception of TheoTrade. You get to see every trade, okay, that we do here at TheoTrade, including text alerts. You get to email us, okay, and we will respond directly to you, including myself. Like people think I got like 10 different people working. We don't. Our instructors answer emails. 3 months is $297. Okay, 3 months is $297. That is not an introductory price. We don't charge you again. If you want to do it again after 3 months, it's another $297. Who cares? It's $300. And I'll explain to you in a minute, there's a full money back guarantee on it. In the first 3 months, if you're not happy, just ask us, get your money back. You don't have to call us. You don't have to send us a special letter in the mail. Okay, you just email us. Like seriously, it's $300. There is a reason that there are 6,000 current participants on TheoTrade. Okay, and it's because it's $300 for 3 months. You go, how can you do it for that? All right, it's because we have 6,000 people on the site. This thing is designed and built for people that really want to learn this business. To give you an idea, when I say that we trade and trade live, I'm going to show you some of the size that we do when we trade. Listen, the inflection point trading system is why you're coming to TheoTrade, but we will get you ramped up for that. As I said, you have 3 months, okay? And you go, what do you do again after 3 months? Whatever you want. If you want to do this again after 3 months, pay another $297, okay? What's the worst that'll happen? You do another 3 months. You want to do it again after that, it's $297. We don't bill you. We don't charge you again. We're not like a gym membership. We don't have members anymore. We just basically say, hey, it's $300, 3 months. Come back again. We love you, okay? And that's fine. And again, there's also a money back guarantee with it, which I'll describe here momentarily. But this class that I put together, it's a 4-hour class. It's archived. It's already ready to go. It's in the can, ready to go. Why do we do that? We record it live. Speaking of recording live, we're going to do another class this coming week, like next week, October 18th. I'm going to talk about that in a second. I am doing the class, okay? It will be live. If you can't catch it live, you can catch it archived. This class is already archived. We do that because we want it ready. We don't want you to wait for this. You need to start executing trades. Like we're going to start texting out trades, constantly. So just be aware of it. The class slide deck. By the way, oh yeah, we have also mobile application. So if you can't get text messages because you're out of the country or something like that, we have a mobile application. And on the mobile application, see if I can actually pull it up here. Okay. On our mobile application, okay, all the text messages, push notifications, it's all available to you. So it's iOS and Android. You can actually watch this on a tablet. Also the class, this class slide deck is actually, you can just download it. So you can download the class slide deck. In fact, you can even watch any of the presentations that we do offline. You can download onto your mobile device and then watch that particular presentation offline. All right. Now, here's the curriculum for the class. Okay, you're going to learn to sell premium and hedge in one transaction. You're going to create a high probability position that generates monthly returns regardless of account size. You're going to learn how to hedge positions, even the most extreme environments. By the way, one of the most critical things, okay, you got to hedge in the extreme. If you can't hedge the most extreme environments, you're already dead, right? You need to learn that because right now, if markets start crashing, you could actually hedge immediately. Forget about even like selling premium. Hedge now, forever hold your peace. Number 4, you're actually going to learn the criteria for inflection point trading. The criteria is like step 1, step 2, step 3, okay? Keeping risk at a minimum. Step number 5 over here, you're actually going to learn to use the analyze, okay? You're going to learn to analyze inflection point spreads, so you're never going to be caught off guard by risk. When I talk about the analytics of it, I don't want to geek out on you. Here's the bottom line with analytics. You ready? You're going to know what you can make and what you can lose before you ever hit send. It's one of the most critical things. You're going to be able to analyze not only today, but you're going to be able to analyze days into the future. Like, you have got to understand, you can't pull the trigger unless you know what's at risk. Okay. And obviously you're going to learn how to find, okay, many inflection point spreads so you can safely allocate for any account size. So sounds pretty straightforward, right? It's a 4-hour class. This is one where I'm telling you, you probably want to watch it twice. There's so much stuff in here. Okay. You know, there's a lot of classes I've done over a lot of years here at TheoTrade. I put huge weight into the inflection point class. It's, again, you know, so why are we only selling it for $297? Again, we don't sell classes, not what we're about. Okay. This is a community. It's 6,000, you know, traders in here. And as I was saying a moment ago, okay, just to give you an idea, when we trade, okay, when I say when we trade, when we do trades, like the other day I sent out this trade in the XLE. I want to show you, okay? When we send out the trade in the XLE, look, I have a position here. It's 24 days out. Take a quick glance, okay, at open interest in here. Take a look. That's us. That's 5,000 contracts. Do you know any other service, okay, that executes that at contract size? Because people always want to know, like, does anybody actually do this stuff? It's 5,000 contracts. I'm going to tell you right now, amongst my accounts, I only have a couple of contracts. I have maybe like 30 contracts total, okay, on our clientele. These people trade. Like, these people trade. That's a 5,000 contract trade that was actually done specifically in the XLE. Okay, and I picked this one out because it's a big standout for a trade that I did recently. Right, that's huge by huge, and it's critical that you guys understand that everybody right now, that's anybody in this business, is executing trades with us here at TheoTrade. In addition to the inflection point trade, okay, we have a brand new class. It's coming live October 18th. It's the flyby. It's stability and profitability in the midst of volatility. So we're actually using ratioed butterflies. And this one's actually, it's a really cool class. I mean, is it as critical as inflection point? Absolutely not. But it's a phenomenally good time to use these ratio butterflies. This class, when I say it's coming to you live, people go, oh, can I download it? No. It's going to happen October 18th, which is what? It's exactly 1 week from today, 10 a.m. Eastern time. It's one of the reasons we're hosting this presentation today. Enroll for this today, and you're in, okay? And you get to watch the class. By the way, at any point, you can still get your money back. That's okay. You're like, you watch the class. Listen, the class slide deck that includes the entry and exit criteria for these. Again, I call them funky butterflies, but it's flyby, right? These, it'll be available October 18th. So the morning right before the class, we'll actually make the slide deck available. We're going to cover how you can take trades where you can risk 1 to be able to make 2 with a 70% chance of success, which is phenomenal. How volatility skew can help you benefit, okay, in almost every options trade if you know what to look for. Ratio butterfly spreads transcend all market conditions. Personally, though, they work a lot better in volatility. How ratio butterflies can help benefit your trading arsenal like no other trade, and a step-by-step guide. Like every class here, we do this highly detailed guide of how to enter and exit the ratio butterfly trade. So this is just part of it. And again, there's a 90-day money-back guarantee. Anything we do over here, there's no stipulations anymore. We don't have stipulations. Listen, you plunk down a whopping $297. It's for 3 months. Anytime in the next 3 months, if you're not happy, get your money back. You don't have to call us. You don't have to send, certified mail. Just support at TheoTrade.com. I'm dead serious about that. We give you a full refund. Okay. There's no reason. Listen, there's 6,000 people here. I always say this, but we want people, okay, that want to be here, period. If it's not for you, I get it. It's okay. It's $297. I'll still love you tomorrow. Like, it's okay. You know what happens to a lot of people? They'll try it. Even if they get a refund, they'll still come back because there's nothing in this industry, okay, for any amount of money that you can spend. And I always say, put your money where your mouth is. There's nothing in this industry. You could spend $50,000 on stock market education. It won't come close to the service that we do for $297. Okay. And we do this and we built this specifically for this. Okay. And people, again, they always ask like, well, how can you do it for 297? Okay. Here's the truth. Are you ready for it? We have deals with TD Ameritrade, Charles Schwab, which are now owned by the same company. We have deals with TD Ameritrade and Charles Schwab. We have deals with Tastyworks. We have deals with Tradier. We have deals with a company called Magnify. There is a deal where we do refer accounts. Oh, we also have deals with Morgan Stanley, which is E-Trade, okay, where we actually refer accounts to them, meaning that we don't tell you you have to go to this brokerage firm. The brokerage firm you go to is completely up to you, but that actually helps finance your education here. And that's why we say there's no excuses, there's no questions, there's no commentary, okay? We want people that want to be here. If you go to TheoTrade.com/IPT, that's I as in igloo, P as in Peter, T as in Tom. So TheoTrade.com/IPT. I'll pop this up here really quick. In fact, I'll even bring up the site. So hang with me here for 1 second. So it's TheoTrade.com/IPT. All you have to do, it's inflection point trading system, and it includes the flyby class, okay? Simply click add to cart. I'm just going to show you something briefly on here. By the way, remember a moment ago where I said you'll have no idea where the market's going to go. Check this out. S&Ps were just up 18 a few minutes ago. Yeah, they're down 18 right now. You got no idea where this market's going to go. I mean, this is just, it's chaos out there right now, okay? And it's turning into a decent day for me. So I was just upside down by $700 10 minutes ago, and now it's a positive 2,000. So what a difference 10 minutes can make. When you go through here, first name, last name, email address, put your phone number in. It automatically enrolls you for our text messaging. And I'm, listen, we don't send you like, 50 texts a day. There'll probably be anywhere from 3, maybe 5 text messages at most per week. They are sent during trading hours. So you don't have to worry about, like a random text message at 11 o'clock at night. Okay. Don't call here no more. No, like seriously. We're only sending 3 to 5 like a week. It's very dependent upon trading environment. There's days we'll send out 4 or 5 text messages in a day, then you won't hear from us for like 5-6 days. It's just how it runs. Okay. I mean, listen, it's real capital. All right. The other thing, you can do $297. You can split payments any way you want. And there's a full money back guarantee on it. There's no if, and, or but about it. I throw that up here. Again, it's TheoTrade.com/I as in igloo, P as in, okay, Peter, T as in Tom, TheoTrade.com/IPT. As you guys are enrolling for this, I will actually take you through everything that TheoTrade includes. And it includes a lot more than I just, kind of commented on, just to give you an idea of what TheoTrade is and what it looks like. This is TheoTrade. If you come over here, for instance, to member chat room, we give you access, okay, to a live chat room. Okay. In fact, right now, Corey Rosenblum is coming on. He's on here in just a few moments. So, wow, British pound getting smashed. Okay. There's an issue right now with Bank of England. Okay. Not good at all. We're in a fast moving marketplace right now, onward and upward from here. So TheoTrade.com/IPT. Couple things. Again, this is from Marianne. I just grabbed this one, okay, because of TheoTrade. I closed my entire portfolio with profits, 0 loss, I'm all in cash. And the reason I threw this one up here is people that are down 30-40% on a year-to-date basis. Okay, I just wanted to show this because one of the most important things to me, you guys got to learn the proper way to be in this marketplace. And that's not go out there and, buy a bunch of stocks based on what some kid said in a Reddit board. Not picking on you if you're a kid in a Reddit board, but I am telling you right now, okay, you've come this far in the business, you need to learn how to do this. All right, a couple of bonuses today. We go beyond a class or indicator. We give you everything you're going to need to invest and trade at one place at one price. Okay, first, beginner's guide, okay? And what this basically is, if you know nothing about options, I want to show you. If you know nothing about options in here, come right over here to the Start Here menu. Start Here menu, options 101, 201, okay, 301. This is to get you ramped up, okay? Regardless of where you are in your learning curve, we have everything you're going to need in here, everything you're going to need. And by the way, in terms of like the level of content that you're getting here at TheoTrade, for those of you that don't know this, okay, one of our instructors is a professor of finance at DePaul University. You can pay $42,000 a year to hear Professor Jeff Bierman, okay, at DePaul, or you can come get him here at TheoTrade for 297 bucks. I'm not joking. All right. These classes are college level kind of curriculum in here. They don't have to be that complex. Okay. But I promise you, there's just no other content out there that's going to even come close to this. So quick start beginner's guide. Number 2, access to over 100 different classes. When I say access to 100 classes, people, we give you everything that we've done since we built Theo. Okay. If you go to the archives, and I come over here to class archives, come over here to class archives, options classes, option newbies, technical analysis. Listen, oh, somebody said we'll be getting the trade alerts after the 297 payment. Absolutely. Okay. As soon as you put your phone number in there, you're up for trade alerts. Like that's it. As soon as you're enrolled, you're enrolled. But do me the favor, okay? Please, this is I'm saying this specifically to Juan. Watch some of the classes. Seriously, know what you're doing before you start executing, because one of the most important things, I don't want to get you into risk that you don't fully comprehend. Take some time. You've come this far without this. Another week or two of you getting ramped up is not going to kill you. By the way, just to give you an idea, these are different genres of trade. Like I am the options geek here. We have a technical analysis geek here. Okay. We actually have an in-house psychologist here. Okay. We have trend traders here, Corey Rosenblum. We have day traders here. That's actually Tony Rago. Okay. We have a stock trader here. Right. It just goes on and on. We have futures traders here. Okay. But I'm the resident options geek. There's inflection point spreads, Z spreads, income accelerator, Ultima. By the way, Ultima is different than inflection point. People always ask me that. Okay, gamma irons, back spreading. But you guys, listen, this is the archive just for options. Okay. And you go, that is ridiculous. Oh, it is. Okay. But you know what? For 297 bucks, you'd rather be overwhelmed than underwhelmed. Like, by the way, if you want to get into this class, just click on it. I say you click on it, you click on it. That's how you actually go into the class. Okay. It's ready to roll. Okay. Position sizing, step 4, right? It has $10,000 net lick, like market tanks, hits inflection point. Again, I think you guys you're going to love the class. There's no question about it. But you get access to the archive of everything we've done since 2016. And you're like, some of the stuff is dated. Yeah, but it's still really relevant too. Because in 2016, volatility was rocking. All right. Bonus 3, we give you access to our trading room. Okay. What's our trading room? It's just live trading throughout the course of the day. So Corey Rosenblum is coming on, like literally, I brought this up. We're in the seam right now between one person getting off, okay, and one person. Oh, here he goes. He's going live right now. So this is Corey Rosenblum, live and uncut. Corey Rosenblum. Corey Rosenblum's a resident trend trader. Okay, he's actually about to execute. Okay, you'll love him. By the way, Corey Rosenblum is one of the more chill individuals here at TheoTrade. Absolutely love what he does. Okay. Ticks look like crash levels. Ooh, they're right. This is good stuff going on right now. So Corey Rosenblum is live. You get access to the chat room. With the chat room comes the actual chat room. There's a few thousand people in and out of this throughout the course of the day. We place trades in there all throughout the course of the day. In addition to it, we answer your trading questions by email. One thing I'm going to tell you guys, for the 300 bucks that you put into TheoTrade, if you just emailed us once a month, it's worth it. There's no question about it. You have no one you can talk to about trading. Now you've actually got instructors, okay? We answer trade-related questions as well. Like you don't have to email me and say, my dog's roommates, friends, girlfriend, like, I don't want to hear it. Just say, this is the trade. And by the way, I'm looking at some of the questions that are popping in here as we're going. All you have to do is tell me what the trade is, okay? And just go for it. Just ask me listen, I've held every brokerage license imaginable. There's no trade related question that I'm not going to be able to answer. So if I can't answer it, Jeff Bierman will answer it. If he can't answer it, Brandon Chapman, we have an economist on staff too. So listen, we can answer the trade related questions. That's not going to be an issue at all. So email us. And again, I put huge weight into that because if you're going to pay 300 bucks, know what kind of value you're going to get out of it. By the way, here's the instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller. The guys who don't know Steve Miller was actually on Tasty for years. Tony Rago, Blake Young. Blake Young worked with me at thinkorswim TD Ameritrade. Brandon Chapman, thinkorswim TD Ameritrade. Jeff Bierman, thinkorswim TD Ameritrade. Jeff Bierman actually built the charting package for thinkorswim. So if you are on thinkorswim and want to know more about the charts, there is no one that knows more about the thinkorswim charts than Jeff Bierman. He's also a CMT and a professor of finance at DePaul. Corey Rosenblum is also CMT. Obviously, Brandon Chapman, CMT. Blake Young, former hedge fund manager as well. Onward, this is actually everybody working from home during COVID. Access to 59 proprietary indicators and scans. If we build a scan, we give it to you. If we build an indicator, we give it to you. We do not charge, ever. We don't charge for something like that. It's ridiculous, okay? So we give you the TheoTheo portfolio live. This is actually the portfolio we're showing you. This is all the trades that I am doing. In addition to it, we give you what's called the TheoTheo small portfolio. The small portfolio is for accounts $2,000 to like $25,000. So you can either watch what I term the big boy portfolio or the small portfolio. You get to see every trade that I'm doing there, right? This is the inflection point strategy. These are all the opening and closing positions. If you cannot watch throughout the course of the week, because some of you are like, people look kind of like, I don't really, think I have time for it. Listen, in 12 minutes, okay, at the end of every week, we update you on everything we've done in the week. So you do not have to sit there all day long waiting for trades. All you have to do is look at some of the text messages, execute the trades, and then you can watch the video at the end of the week. It'll actually update you on every move that we made, why we made the move. Okay, everything's in there. Bonus number 5, technical analysis toolkit. Okay, everything you're going to need. Tech 101, Tech 201. There's 21 other technical analysis classes. Bonus 6, day trading treasure chest. Okay, that's a tough one to say. This is for those of you that do want to trade intraday. Okay, again, we cover every genre of trade. Bonus number 7, mindset mastery. I don't often say this. Okay, write this class down. 5 essential building blocks to successful trading. It's Steve Miller. Okay, it's found under mindset here at TheoTrade. You need to watch this class. I don't care how many years of experience you have. Okay, I had about 19 years of experience. Okay, before I actually sat down with Steve Miller and really discussed this stuff with him. This class I watched when it came out and completely changed the way you think about markets and risk. I'm serious. Watch this class. It's phenomenal. That class alone is worth $1,000. Bonus 8, quick start guide to selling premium. This is like, you buy like a new piece of technology, there's a quick start guide. This is a quick start guide for those of you that already know a little bit about selling premium. What our members are saying, thanks for your reply. It's very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with, and one to which I can see a pathway to retirement. Okay, we give you classes, coaching, email access, 24, mobile indicators and scans, a live trading room, live classes, everything you're going to need to succeed. We literally built TheoTrade is the Netflix for traders. That's what we built. It's $297 for 3 months. Again, it's theotrade.com/IPT. I stress to you again, there's a 90-day money-back guarantee. Okay. In the 90-day money-back guarantee, there are no stipulations. You just email support@theotrade.com. There's no excuses, no questions, no commentary. You don't have to tell me like, my dog's sister's boyfriend's mother got ill. Like, we get it. Like, life sometimes gets in the way. I get it. It's $297. If you receive a refund, you get to keep bonus number 1 on us, which is options 101, 201, 301, and you get to view the flyby course. Some people are like, they'll view everything they can in like 80 days and then cancel. Like, I get it. It's okay. Like, it's okay. Like, really, it is. Like, listen, get into TheoTrade now. There are 30 spots on the TheoTrade riskless deal. So that's the incentive we give you today. Enroll for it today. There's a couple of reasons you want to enroll today. Number 1, you want to enroll today because you got to get ramped up, because 1 week from today, there is a live class. The live class is flyby. It's coming. It's October 18th. Okay. In addition to that, again, we want you to get a little bit ramped up to get understanding what we do here at TheoTrade before you come to a live class. Again, there's no stipulations to the money back guarantee, but we provide 30 riskless spots, meaning that there's 30 spots on the money back guarantee. We do that to incentivize those that want to enroll today, right? So again, it's a riskless trade. 30 people, the first 30 people to enroll, fantastic. With that, I'm going to answer a couple of questions here. All right. By the way, John came in, closed year-to-date profit from Ultimate Trades is paid for my yearly TheoTrade subscription. Again, everything you get for 297. Inflection point, quick start beginner's guide, over 100 different classes, access to the chat room, which includes email to the instructors, the TheoTheo portfolio, which is the premium selling portfolio. Okay, the technical analysis toolkit, the day trading treasure chest, the mindset mastery, which includes Steve Miller's class, okay, and the quick start guide to selling premium. As I said, it's theotrade.com/IPT. Okay, follow me to this link for the expected move indicator. So you guys cruise down here. I want to reiterate, okay, theotrade.com/IPT. As I was saying, I'm going to answer a couple of specific questions here, but I do see there's a couple of individuals right now that are enrolling. It takes about 6 to 7 minutes before I actually see people enroll on here. Okay, I'll read off just your first name. Okay, for those that know that obviously you've enrolled, but let me go ahead and answer a couple of generalized questions. Then we'll get into some specifics. By the way, if you have any specific questions, chat them in right now. So Brian, Jeff, helping out. By the way, the first batch of names just came in. Jeffrey G from Colorado, Juan D from Texas, James K from Arizona, Timothy L from Minnesota. Just again, it takes me about 5 to 7 minutes before I see your name pop in here. As I said, I want to just answer a couple of generalized questions in here. Here we go. Anything that you need to get started here? Maybe a laptop. You know, you don't even need a laptop anymore. Really, you just need like some kind of a tablet, obviously an internet connection. You can trade even off your phone. By the way, I execute some complex positions now, even off my phone. Number two, we don't do memberships. It's $297. We don't auto renew, okay? Meaning that you pay $297. At the end of 3 months, you decide if you want to do it again. We'll send you an email. That's it. Number three, we provide weekly updates so you can follow all the moves we make. The weekly update only takes 12 minutes, so it's not going to take a tremendous amount of time, right? Okay, everybody comfortable on that one? We archive everything. Every word spoken here at TheoTrade is archived. So if, for instance, you like Corey Rosenblum, you can watch every archive from Corey, okay? So that's no problem whatsoever. You can even watch it and speed it up. You can watch Corey at 1.5 times the speed. So that's fine. We provide you access to TheoTrade Mobile, as I mentioned already. Okay, you can download it, archive it, view it at your leisure, add your cell phone number and receive text message. There were several people that kept asking like, hey, does it cost more for the text alerts? It does not. We don't charge more. Like the one thing you guys got to see, we're kind of all encompassing for $297. Okay, you get everything that we do here, and it's important. Okay, number 7, you can email us anytime, receive a response within 24 hours. Just one caveat: give us 24 hours. Most of the emails we respond almost immediately, but you got to give us 24 hours because somebody will email us with 5 minutes to go on an expiration Friday. We're like, come on, man. Listen, we trade. I don't mind saying this. Most of the year, I'm on Eastern time. Most of the year I'm on Eastern time, but I do spend some time in Arizona. So part of that year I'm in like, I don't even know, Mountain Standard Time. So sometimes I answer emails before the market opens. Sometimes I answer them after the market closes. But we all answer emails. You got to give us a little bit of time. Don't email me 5 minutes to go on an expiration Friday. Number 8, you're going to gain access to every course we've done in the last 7 years. Everything we've done in 7 years. Classes, coaching. There's not a word that we have said on TheoTrade that is not archived. It's awesome. You can even search it. Number 9, variations of everything we do is available in an IRA, okay, or retirement account with as little as $2,000. Number 10, okay, we can help you get approved for options trading at several major brokers. Number 11, there are 30 riskless spots available today. And obviously, listen, get results, take action, and roll for TheoTrade now. I put a lot of a lot of emphasis. Okay, this is a time to learn a skill set. This is not a time to sit back and get underneath the desk or do the ostrich with the head in the sand. That's not a strategy. Like, I'm serious. Like, learn this stuff. Now I'm going to answer a couple of direct questions on here for you guys. Again, I'll pop this back up here. It's Inflection Point Trading. It's TheoTrade.com/I as in igloo, P as in Peter, T as in Tom. A couple more names just popped through. Suresh H from Florida, Gerard B from New Caledonia. Okay, it's one of the few places I have not been there, sir. Okay, Donato P from Illinois, and Sheldon G from Missouri. So all right, onward and upward. Though I've been all over the South Pacific. That's why I was talking about New Caledonia. Anyway, onward and upward from there. I'm going to answer some specific questions. Okay. Somebody said, do Fed minutes really move the marketplace? Okay. Yeah, tomorrow they will. Tomorrow you're going to have Fed minutes come out, and there's going to be some insights in there that are going to be fairly pivotal. Sorry, I'm reading some of the questions off in here. Oh, I like this question. It says, Don, you've been doing these trades for years. Okay. Are we in a market right now that benefits this theta melting strategy because of increased IV? Actually, it is by far and away better right now. The more hostile volatility gets, the better it is. And it doesn't just have to do with implied volatility. It has to do with a distortion in skew and back month volatility coming up. So there's no question. Basically, the rougher the ride, and I hate to say it in any other way, but the rougher the ride, the better it is. And it's not like a popular thing to say to people, but part of you, when I was on the brokerage side of this, I felt very differently. On the brokerage side, I'm like, oh my gosh, we need to get through this. Volatility needs to calm down. Our clients are dying. Well, I'm not in the brokerage world anymore. And now I'm sitting here telling you, like, do I root for volatility? Hell yeah. I mean, I don't want to see our clients get beaten up, but you got to learn something. Because I'm going to tell you right now, this is not going to be a stock picker's market for years. Like, there's going to be some wicked 500-point bounce coming in the S&Ps, no question about it. Could be off of the CPI coming on Thursday morning, where the S&Ps could bounce 500 points, or we could completely collapse. And there's no in between over here. And I just care less at this point. I can care less. And part of me really does root like, let's go down, let's get it on. Because the more we go down, the higher volatility goes, and the more the opportunity you're going to get. And I don't, I don't want anybody to take that the wrong way. I'm not rooting for the markets to collapse. I'm not, but I am rooting for volatility. You have to be. Once you actually understand volatility, okay, is the critical component to this. And I like what somebody said. I've been doing it for years. And I appreciate, like, some people email in and they literally say, like, how come you haven't changed strategy? Because the crap is working. And it's been working. It's just been working since, 2020 is when it worked for years before then. But in 2020, when COVID hit, the onset of COVID was like, all of a sudden premium selling was kind of like, sideshow Bob, boom, it came back better than it's been since the financial crisis. Like, that's how good it has become right now. All right. Onward and upward from there. A couple more questions I'm going to answer over here, and we'll wrap things up. I know the couple more people are obviously enrolling, and I'm just reading off a handful of names. Okay. Will the alerts include a hedge? Absolutely, unequivocally, yes. Everything that I do, okay, as I really emphasize, I'm no holds barred. Like, I'm not going to hide the hedge from you. Of course, we put the hedge in there. Okay. Oh, somebody said, you mentioned in the previous webinar, the most margin, okay, would be like $10,000 in a brokerage account. Okay. So using the strategy, if it all goes well, could you do $2,000 a month? So depending upon, like, that's kind of a hard question, only because, and I'm answering like Juan over here. So can you make $2,000 a month? Absolutely unequivocally, the answer is yes. But, and before we talk about like profitability in here, we got to get you ramped up. The more aptitude you have for risk management, the more you're going to be able to make. And initially coming in, and I'm going to say this in the nicest way, people do not have a good understanding of what risk is. Okay. The only difference that separates, some really strong traders, really good traders, and know nothing about market direction. Really good traders understand how to absorb risk and how to deal with it. And the interpretation of risk here is what separates you from being able to make, for instance, $2,000 a month or $4,000 a month, or whatever it is that you're looking at. Okay. It's your ability to interpolate risk. and you go, well, I'm willing to take the risk. Well, that's okay. You still have to actually be able to consume it and understand, okay, from a point of view, like it changes how you set up the strategy. Those that want more risk can make more, and it changes the ratio a little bit in there. And we'll walk you through all of that. In fact, that's the stuff that I talk about every day live in the chat room over here. Somebody said, Tom said, do vertical spreads work if only doing one-sided trades? So we wouldn't really want to do one-sided trades. Vertical spreads are not great at present time. Like if you're selling a spread, it's not great. The skew is not helpful over there. Juan also said, what's the typical days to expiration when opening a position? So Juan, the hedge is in one expiration, and the option you're selling is in a further out expiration. Excuse me. The option you're selling is typically, excuse me, the option you're selling is typically as far out as anywhere from 100 to 115 days out. Okay, that's the option you're selling. But the whole key in here, Juan, is the hedge, and we'll walk you through that. There's basically the way the criteria works. It says the hedge will fit in an expiration from X to Y, period. Like there's no give and take relationship. It just basically says these are the expiration cycles to use, right? By the way, a couple more names popped in here. Michael J. from Minnesota, Todd H. from South Carolina, Tom M. from Vermont. So it's getting cold up there in Vermont. Sorry, I like to poke people a little bit. What is it? 88 degrees here in the Virgin Islands. Okay, hold on. Beach looks awesome. It's perfect right now. It's getting a little late, but I'll still be going down in a few minutes. We have three kids, 8, 10, and 12. So, this is not a tough place to live if you're a kid. All right, hopefully we got a couple of those answered over here. Let me just grab one more of these. Oh, somebody said, what's the difference between this and the Ultima? Okay, so you saw the name Ultima a couple of times. Ultima and inflection point. It's the same logic of selling premium. We're still selling the exact same premium. The difference between inflection point and Ultima is how you hedge, okay? Inflection point, first of all, is I said this earlier, but it's like 1,000 times easier to hedge using inflection point. And the funny thing is, inflection point in this market works far better than Ultima, meaning like it's just, it's a tweak in how we actually reduce risk. That's it, nothing more. Nothing less in there. So with that, listen, I'm going to wrap things up. I went way over in time today. Markets are fairly volatile. I am actually, tomorrow's Wednesday, so I kick off the chat room every single day here at TheoTrade. So this particular chat room, I will be live starting at 6:20 Pacific, okay, which is the same, of course, as 9:20 Eastern time. So I'll be live first thing in the morning tomorrow. By all means, you can join us live in the chat room, chat in. Hey, I'm new to this. Okay, it's good. I like it. 42 degrees this morning. Okay, it got as low as 82 here, if that helps. Anyway, I'll be live first thing tomorrow. You guys can fire questions in there. By the way, don't hesitate to email us. Okay, it's good. By the way, Sue was saying, is the inflection point best trade for today's market? Of the strategies that we have here, unequivocally, yes. Okay, unequivocally. Like the one thing you got to stay away from in this marketplace, directional bias. If you think you're going to be able to pick bullish or bearish, you're going to get run over. Like you can't do that. You got to actually like downshift and realize I don't know anything right now, and that's okay. I mean, look, the markets just absolutely came apart the last 30, 40 minutes of trade over here. So yes, okay. You need to sell premium at this point because this is not about surviving. This is about thriving in the midst of volatility. With that being said, I want to thank everybody for tuning in. It's TheoTrade.com/IPT. If you guys need anything, we'll be on for the next couple of minutes answering a couple of questions. Thanks, everybody, and have a wonderful afternoon. Bye-bye.